Good morning, everyone. How are you? Are you awake enough to start with this great session? If not, you have coffee over there, okay? So, good morning. My name is Ainhoa Campo. I am the Global Head of Open Innovation at BBVA. I am really excited to be here today, again in this innovation stage at BBVA. And this year even more because we are hosting the final of Open Talent Spain, and I think it's going to be a great day. The really good ideas and the great guys, you will hear them along the morning, and we will hear great pitches, and we will have really great inspiration ideas. But today, what I'm going to share with you for these very first minutes is what we do as open innovation in BBVA, and try to give you a little light of how we work. And if you have any idea, any connection, please find me after this talk, and I will be great to hear your ideas and share even more connections. So as open innovation, we say that we are embedded inside all BBVA innovation strategy. As every single corporate, we innovate with these three words: building, buying, and collaborating. But we have a full set of tools in each different part of this buy, build, and partner or collaborate in order to do things, no? So, and the great thing is that we do it in this circular way. Although we talk about them in a standalone basis, the great thing is that we put the three things together and they are always in connection. So as build, of course, we build great solutions. And for me, let me say that because I am very, very proud of that. For example, we have been honored by Forrester of having the best mobile app, banking app in the world for 3 years in a row. And this has been done because we have developed the whole catalog of products and services of BBVA, and we have offered them through the app, and now it's completely usable through the app. But then we have other solutions that we have developed as Valora, that is a solution that is offered not only to customers but for all the users, and help them to find the best house and to know the best price. And this was done thanks to the collaboration that we did with Mariva, that is a company that we bought some years ago and helped us to develop some technology and build together this solution that is Valora. In this part of building, what we do? Easy. We do acquisitions when we want to take this knowledge, this technology, or go to a market or to a geography or to a segment that we want to go in a quick way, and we want to jump into this other knowledge as quicker as possible. And then we have other solutions like investing, that we do it through our two VCs that we have, one, Propel in San Francisco and Innovation in China, and we invest having minority stakes in different companies related with fintech and artificial intelligence, and trying to know what is the next thing that is going to happen, and try to know and to learn and how to be there in the future. And finally, collaboration. Collaboration is the biggest part of all, because we collaborate with a myriad of different ecosystems and in many different ways regarding we want to work in the Horizon 1, 2, or 3. No? We are, as Open Innovation, more focused in the Horizon 1 and 2, collaborating mainly with startups in order to do things together. And we do things too in the part of the Horizon 2 and 3 by doing ventures, collaborating with universities, and doing R&D in order to know what is going to be in the future and trying to take it into the present. No? So we, as Open Innovation, our mission, what we want to do is to connect and collaborate with you guys, with all the community that is working around the fintech universe. fintech universe and fintech related. We are talking about artificial intelligence too. We are talking about blockchain. We are talking about cybersecurity, RegTech, wealth management, everything. And what we try to do, we as Open Innovation, we are the bridge. We are the facilitators between the bank, that is the one that has this willingness to innovate in different ways, and with all the knowledge that is outside the bank, that is huge, and we want to be this bridge in order to collaborate. And the second part of the phrase is that we want to bring the best solutions to our customers. This is our main goal, no? And it's not only customers, but users, because we have a lot of customers, but we have even more users that maybe they don't have an account with the bank, but we can offer them some solutions that can help them in their lives in different ways, and at the end of the day, maybe become customers, or maybe continue to be users, and we can provide them with a value proposition too. And how we do that? We are grounded in three main pillars for doing that. The first pillar is impacting into the core. This is the core of the bank, the business. And the business understood below the glass, and with the processes, the efficiency, and above the glass, offering new solutions to our clients, or gathering new segments, or being in another geographies. So we want to impact in our business. And how we do that? We as Open Innovation, we are in amazing places and in amazing forums and events such as that, South Summit, and we learn from many, many people. And we gather great ideas, tremendous smart people that we talk to, but it's not worthy if we don't take all this knowledge into the bank. And this is, for me, the main milestone that we have done in Open Innovation. That is pretty easy, but I think, and I always say, we started to talk with the bank, and it's not that easy, because BBVA, as many other big corporations, is huge. We have a lot of business units, a lot of different countries to talk with. So what we have done is like go with them, talk with them, and try to see what is their strategy, their roadmap, where are the main pain points, and then identify where we think that we can help them with this Open Innovation thing, with this other knowledge that this is outside the bank, and trying to bring them to them. The second part is supporting the local ecosystems. So what we want to do is, where BBVA has a footprint in places such as Spain, Portugal, Mexico, Turkey, we want to be there supporting these new innovation ecosystems. Maybe they are not the tier one in fintech, but we think that we have to support them, not only because a social responsibility thing, that is a great thing to do too, but because we think that this is a circular thing, this is a circular economy by all means. Because we support you guys by supporting, by being with you, helping you to be in the next level, you will support the economy, and at the end of the day, this is a win-win situation. For sure, we will leverage on that. And that is why we are here, for example, in South Summit. We've been here for the last 6 years, and this event, and we have seen how this big community has been growing each year. And this is why we are supporting Open Talent. This is our 11th edition. And when we started in 2008, nobody talks about fintech. Nobody talks even about the startups. And we were just evolving with you. And now we can say that this year, this 11th edition of Open Talent in the geography of Spain, it has been really tough to choose the finalists. And I think the jury has a really hard job to do to choose who is going to be the winner. And finally, this global part. We have this global footprint. Not only as a bank, that we are a global bank, but as Open Innovation, we have to be in these main fintech hubs that are leading the innovation regarding the fintech universe. For us, these 5 main places are UK, San Francisco, New York, Singapore, and Israel. And we are in these places in different ways, and we want to focus in the verticals that they are specialized. For example, in Singapore, they are specialized more in cross-border things, in wealth management. And for example, for sure, you know that in Israel, they are the best ones in cybersecurity. And I don't drill down more in that because all of us know why. And we have many other hubs to be, for example, China. But I will share with you, and if you have other thoughts, please, let's talk later on, is that China is a great place to have inspiration, but for us till now, it's quite tough to bring all these new things because geography, language, culture into Europe or into Spain or Latin America, no? So it's a great place to inspiration, but to connect, to really connect and collaborate for us is quite tough right now. So with these three main pillars, what we have developed is a complete catalog of different services of products for BBVA and for the startups or the ecosystem fintech community. So what we do? So for us, we started, as I told you, impacting into the core by hearing and talking with the bank and trying to understand what are their needs. Once we have that, we start with a funnel that everybody has, no matter the startup or no matter the company, no? We always have this big funnel where we try to gather inspiration, leads, where to be, and how we do that. In this has been here, like in South Summit, Open Talent. We have in our open spaces moments or we lead conversations around topics that we think are important to the community. And with all this funnel of different leads that we have, we try to connect and finally collaborate with the bank. And for doing that, we have developed a whole process that goes from this need to finally do a project by leading and going by with the business unit in doing things. So once we have a need, then we go with this inspiration or with driving scouting to find out the right startup that can fulfill this need. Then we put together, that is not so easy because the business unit is always very, very busy because they have a P&L to go with. And we try to put together this startup with the business unit so they can really talk and see if they can do something together, collaborate, do an initiative or wherever. And once they have this willingness of doing that, we have a process that is called Fast Track, and that for us has been a milestone. That is a process that helps everybody, again, the bank and the startup, to do really this project that they want to do in a quicker way. No? So what we did, for us, this is a milestone because it has changed a lot of things. And we started 1 year ago, at the end of last year, and this has been the milestone of 2019. And I want to share with you this, what is it? What we did is a thing that we already do in the bank, that is put together the people that has to work in order to do a project. That is the people from business unit, the people from engineering, and the designers. So they can design and they can define what they want to do. And the fourth in this core team is the startup. So all together, they are going to work together during 3 days in order to define what they want to do. And what we do is to give them tools in order to define what they want to do. They started to think with design thinking tools in who is the customer, what is the problem, and what they really want to do. But it's not only an idea, and it's not only seen from a business point of view. We end up by defining the technical flow and even the KPIs. So at the end of these days, they have the complete idea of what they want to do and if it's successful or not regarding these KPIs. But finally, at the end of these 3 days, they have a great day with all these guys. All these guys are the different stakeholders of the bank, because you have to understand that we are a company that is very regulated. We have many risks to take care of. So there is a lot of stakeholders that if you have tried to work with corporations, you know that someone has to say something, another has to review. So what we do is you have the complete idea, and that you can defend with all these people, and we have people from compliance, for legal, for security, for solutions architect. We have all these people that is going to help to shape the final way that this pilot is going to be, or this initiative is going to be done. Okay? And the great thing about that is not that we have done this process and it's working. The great thing of doing that is because we could do that, is because during these last years we have a great turnover, a great change in the culture of the bank. In this last year, we have been working under this process and this way of working of agile, working in scrums, working with multidisciplinary teams. And in this way, when in the bank, when a multidisciplinary team has been set up, they are all working under the same goal. And they see that this project is a project that has been completed by all of them. And that is the big jump that we did in order to do these projects more quickly. So once we set up this fast track process, was very easy because all the company was with this mindset. But as I've seen, and now I'm feeling that I am a saleswoman, that I'm trying to sell you this great idea, and I hope that this helps not only BBVA, but if there is any other corporation, I hope that it's an inspiration for you guys to do something similar, or for you startups to understand us, how tough is to work, not because only one person in the bank, but because we have to collaborate with many other stakeholders inside the bank. But I want these stakeholders and these people that was involved in Fast Track to explain you how it worked.
BBVA ha sido la empresa que mejor, yo creo que mejor lo he estructurado y que más ganas le ha puesto. Desde luego el hecho de que estén todos los stakeholders en el proceso es algo necesario.
Having all the stakeholders together at one place, knowing the startups, knowing each other, I'm sure we will benefit in the near future.
Muchas veces lo que nos pasaba antes era hacer reuniones y estar más en defensivo, ¿no? Yo creo que la metodología que ha intentado imponer BBVA durante esta semana ha permitido pues, ser muchísimo más constructivo y al final avanzar de forma mucho más rápida tanto para el banco como para el startup.
Trabajar durante una semana, todos juntos, nos ha permitido saber que el objetivo de trabajar todos en equipo puede permitirnos realizar todas las labores y todas las tareas que hay que realizar en un proceso de este tipo de manera muy ágil.
De hecho, sentarnos todos juntos e intentar resolver las deficiencias y buscar soluciones a la prueba de concepto, yo creo que es bastante enriquecedora.
Y luego, durante esa semana de definición, veo que tenemos apoyo y compromiso de todas las áreas, de diferentes equipos, y nos ayudaron mucho.
Las metodologías de trabajo utilizadas yo creo que son las correctas, me han sorprendido bastante porque han sido muy directamente al grano, a resolver los problemas. Yo creo que el Fast Track crea valor y yo creo que sí, que se debe implementar a más áreas del banco porque yo creo que es una experiencia bastante enriquecedora.
El Fast Track mejora los plazos del proyecto, en este caso de la prueba de concepto, porque nos ha hecho trabajar con metodologías ágiles y dinámicas, usando Design Thinking y en un muy corto periodo de tiempo, una semana, algo que lo pensábamos casi imposible, hemos llegado a definir una prueba de concepto. El hecho de trabajar con startups me ha parecido muy enriquecedor, me ha parecido que las metodologías que se han usado nos ayudan a trabajar de forma rápida, dinámica, como un único equipo.
Es un deber trabajar con startups, ¿no? Yo creo que las oportunidades que nos están dando de conocer soluciones de forma anticipada a problemas que a lo mejor siempre hemos tenido, pero incluso los nuevos que están surgiendo, es tremendamente positivo para todos nosotros, ¿no?
By the way, all these fast tracks has been done in Spain, in Mexico, in Colombia, in Argentina, in Peru. So we are able to do all these things in the whole BBVA footprint. We hope to implement these last fast tracks in Turkey and in US for the next year. Sorry. And there was a slide. There was a slide, the last one, because we have a funnel. I've been talking about the funnel. Yeah? Sorry, it's last minute, but I've been talking about many, many things, and there is an output, no? There is a result, and this is the result of all the things that we have been doing. And for me, this is, at the end of the day, my KPIs that I have to show, to show you that I think that we think that open innovation works, no? So last year, we ended up with 31 pilots or acquisitions or investments in the companies that we were evaluating. And just a couple of examples of things that we did, and it's very, very, very open. For example, last year, we ended up with 13 pilots. We tried with 13 pilots, 11 scaled, 5 that didn't work, didn't scale, and 2 investments. For example, Change is a company from Israel, and is working with BBVA in the States in order to improve the knowledge of our customers to help them to manage their finance. There is a component of artificial intelligence quite high. And another one, just the last one, is BDO. This is a Spanish company that is related with the claims when you have an accident with your car, and is helping our insurance department to do these claims in an online way with your video, and help us to do it more efficiently and with a better user experience. So that's it. That's it, the final part of that I wanted to share with you. And I hope that next year maybe your logo is in this presentation. Thank you very much.
Thank you very much, Ainhoa, and welcome everyone here. We are at Innovation Stage by BBVA in South Summit, and we are here to celebrate again a new amazing morning with all of you. So please, everyone that wants to take a seat, this is your time. We are going to change now the topic, because we are going to introduce you now the Open Talent Competition Spain 2019. We will have here 10 amazing startups selected to be the finalists. And who will be the winner? We will know everything from 12 o'clock. But firstly, I would like to introduce you. Our Daniel Soriano is Director of Entrepreneurship and Innovation Center at IE Business School, because to all these startups, the 10 ones, they are going to celebrate, they are going to receive an acceleration program. And here we have IE Business School to explain you in what consists the acceleration program, the importance of having this acceleration program to those startups. And then after Daniel, we will start the amazing final of Open Talent Competition. So Daniel, thank you very much, and we will talk later.
Okay, thank you very much. Good morning, everybody. As Pedro said, my role at IE Business School is being the director of the Entrepreneurship and Innovation Center. I'm in charge of developing programs for startups, corporations. We try to take the most of the learning experience, putting together all your knowledge, experience, and try to exchange the knowledge that our professors, our trainers are going to bring to the class. I just want to briefly explain a little bit what you are going through. By the way, you already started the program. You started October the 1st. And I just want to go a little bit through the program so you really know what is coming next. The first sessions will be related to understanding the financial landscape. We really want you to understand what are the different trends that are happening in the market, different stakeholders, what are the needs that you are identifying in the market, and how you can really, understanding that specific landscape, you can bring value to the market. That's key. Understanding that is probably something that you already have done because you are already working with your proposals. But I think it's good to know maybe what is coming next. What are new regulations, new stakeholders, new trends? That's really, really important. We will continue with financial management. That's key, okay? I collaborate with a venture capital fund, and I have to tell you, all the forecasts are wonderful, are beautiful. Sometimes they are not, let's say, linked with a strategy. Sometimes they are not that credible. And you need to, let's say, demonstrate that you can really achieve those numbers. How you can really put together all your hypotheses in a balance sheet, in a P&L, and I think that's key in order to really assess the investment that you are proposing to any venture capital or to any corporation. That's really, really important. Next thing will be focused on digital marketing with Kevin Sigliano. He is an expert in digital marketing, basically how you can really open up conversations with the market, how you can really connect with your user, how you can really engage them, okay? Engagement is everything. Of course, understanding the landscape, understanding your user, but also how to approach them in the best way possible. Of course, you can identify like different channels, different strategies, but you have to be effective as well, okay? Whenever you receive any financing round, you need to take the most of it. And for us, that's key, okay? So if you are effective with your digital marketing strategy, you will be able to really connect without, let's say, wasting that money. Next thing, you probably know Miguel Arias. He's head of open innovation, or let's say Wayra in Telefónica. He will be, let's say, delivering sessions related on how to sell to corporations, and also a session related to M&A for startups. Why is that important? Because you never know. I mean, first of all, a corporation could be your client, so you need to know what they want, what they need, what are the conditions that you usually will find when you are dealing with them. Having that knowledge will help you to, let's say, set or specify a specific conversation. What should be your proposal in order to have this commercial relationship with the corporations? And also another thing, maybe you reach to an agreement to run a pilot with them. What are they looking for? Understanding what are the different, let's say, departments that they will be in contact with you and how you can deal with them is also really important. And regarding M&A, you never know. You could have an exit strategy being acquired by them. That could be a great way to, let's say, getting your profit of your startup. And how you could be interesting for them, that's also important. You usually are interesting for a corporation when you reach to a specific stage, and that stage requires, of course, some maturity in your technology, in your team, your strategy. Maybe it's about getting more users or getting commercial agreements or, I don't know, maybe providers. So that's important because that will help you to really understand what could be the goals that you need to achieve in the future, okay? That will be the online program. We also have prepared for you an acceleration, a face-to-face acceleration program that is really, really energetic. You will be face-to-face with our professors talking about metrics, okay? Same thing. When I'm assessing investments in the venture capital fund, we need to know what you are measuring, you know? And you will see that whatever you are measuring in your company is going to give you a great idea to the venture capitalist about what you want to achieve. And measuring the right thing is key, because that will lead you to the right conversation between the team to really get to your goals. That's really important. You will also get some sessions related to technology. What are the different technologies that are being used right now in the fintech world, which is also really interesting. We have also invited a great lawyer, an attorney that is really used to deal with investors and startups. He's really tough guy, but he's really good on letting you know what you should be, let's say, having, or what is the right conversation that you may have with your lawyer, or what are the things that you need to have controlled. The contract, sales holder agreement, all those things are really important. Well, many investments are, let's say, are not done because sometimes the cap table is not the right one. Sometimes the sales holders agreement is a bit risky, so you need also to prepare those things. That's really important. After that, you will have David Bonilla, probably you know him. He's also the founder of TarugoConf. He's a really great guy. We will talk about productivity. Okay, productivity is key. I've seen that many times when some entrepreneur gets some funding. You get to say, okay, I have money. I can do more things. I can spend that money in marketing. I can spend more money in hiring people. And maybe you don't focus on the right thing, on productivity, on creating something, on measuring that productivity. That's key. That's really important. So he will at least ask you, he will have like discussion. As you can imagine, all these professors have a lot of experience in their entrepreneurial background. So this is not about lectures. This is about sharing with you what you are measuring, how you can maybe think in a different way, and you can get the most of your strategy. So productivity is also very important. And another two professors, Iñaki Arrola, he's the founder of K Fund. He's a very well experienced investor. About how you can really, about funding strategies. What are the things that you need to have in mind in order to have a good conversation with an investor? What they are looking for, why they will be investing in your company, what they like to see, Many times you are not prepared about what they need, what they want, and what you try to sell is not what they want to listen. So you need to align that, Sometimes there is an asymmetry of information, and then you need to put that together so you are on the same page all the time. That's really important. You need to provide trust to your investors. And finally, Joe Haslam, he's a very experienced entrepreneur, and he's the responsible, the program director of our Scale Up program. Everything related to scalability and growth is very relevant. As you can imagine, when you grow, you need to scale operations, you need to scale technology, you need to deal with people, you need to deal with attraction of talent, and how you manage that is key, because one of the key risks that you will find when you start your company is growth. Growth is one of those stages where we see most of the startups die, because it's a risky moment, okay? You have like a first concept, but when you need to scale that, there will be some specific investments and you can fail there, okay? You need to really understand where you need to put the emphasis on that specific effort. And finally, as you know, you will have a demo day on Saturday, so you also will receive some pitching sessions from Nacho Mateo. He's also very experienced. He's running our venture days all over the world. He's training startups in all our events in different parts of the world, Latin America, in Asia, in Europe. And again, he will be helping you to send the message, okay, to convey a really credible message to your audience, whoever is that, okay? That could be a corporation, and it could be a venture capitalist, okay? So as you can imagine, okay, that's the first part was the online program, and now is the acceleration program. That's a little bit my task today, giving you that explanation, and of course, hoping that you enjoy that program. So that's it. So thank you very much. Enjoy your pitches, enjoy them, okay? Don't suffer them, enjoy them, okay? Good luck.
Thank you, Daniel. Thank you very much. So we are 3 minutes ahead to start the final Open Talent competition. You are now going to see the 10 pitches of the startups, the ones that we were selected by the evaluators of BBA. And here in front of us, we have the magnificent juries. I have to tell you something about Open Talent. Open Talent is not only a competition. Sometimes we think that this is just an award, recognition that we have, that we give to the best ideas, to the best startups. But let me explain you my personal opinion about what is a competition of startups. Firstly, it's true that we give an award, we give a recognition to a startup. But secondly, one of the things that I see thanks to this competition is that we have evaluators for BBVA spending some time of the job trying to identify new solutions in the ecosystem, trying to identify new proposals, And this is something that this is magic, how we, for example, during the last 11 years, we have had over 800 people in BBVA evaluating startups. Evaluating startups, 800 people, 800 workers evaluating startups. This is magic thanks to this competition. And secondly, also, what I see is that here, the jury has, you have to know, this is the first line of the digital transformation of BBVA Spain. And they spent this morning with us. They are going to spend this magnificent time with us in order to identify the best solutions with the startups. They are going to evaluate, and they are going to break the whole agenda just to do this. And this is also magic thanks to the Open Talent competition. This is the 11th edition. You already know that. I know I was mentioning that. Over 6,000 startups already came to the startup competition as applicants. Over 800 people in BBVA, they were evaluating them. We gave 1,600,000 euros of awards during the last 11 years. And also, they were coming from over 90 countries. Imagine how huge was the competition. And having said that, I'm going to start the competition of Open Talent 2019 in Spain. Are you ready, everyone? Yes? Cool. Rule number 1, they are going to have 4 minutes. 4 minutes, maximum 4 minutes and 30 seconds. Just in case, I'm going to break them in 4 minutes, 30 seconds. Secondly, jury is going to evaluate startup by startup. And thirdly, you have to cheer them up because they are here to give all of they can, because they won all of them, the 10 startups, to win this award. So, are you ready? So let's start with the first startup of today. The name is Cobee, and with us we have Borja Aranguren. He's the CEO, and Cobee is one of the top SaaS solutions for companies to manage all the employees' benefits. Borja, the time is yours. Thank you.
Hello. So first thing I want to do is to ask you to think of 24 billion euros. That is a lot of money, right? It is the exact amount that was invested in venture capital in Europe in 2018. So now I want you to imagine that you take all that money and that you put it directly in the trash. How does that feel? That's what many companies are doing year over year. I'm talking about employee benefits. Employee benefits is a big market that has been growing at a high pace during the last years. That results in 95% of the companies that are already offering some kind of benefit to their employees. So that is great, right? You are all very happy in your jobs because you have the benefits that you need. No, that's not probably the answer, as it's not for the market either. Only 32% of the companies, of the employees, feel that their benefits adapt to their needs. So the difference between that 95% and this 32% of the employees who feel rewarded represents that 24 billion euros a year. And this is happening because benefits have been designed for companies and not to serve employees. Companies start buying different solutions and offer them to their employees. These are cards, blue shares, insurance, discount clubs, and this results in an unclear value proposition for the employees, which leads to frustration instead of satisfaction, and at the end is less usage of the products that they receive. So it becomes a poor ROI for the companies. From Cobee, we're here because we want to change this mess. What we're doing is we're focusing on the employee. We're bringing out unique value proposition for them with only one product, which brings a clear understanding, higher satisfaction, and at the end, more usage of the product, which results in a higher ROI for the companies. And how are we doing this? So basically, we're offering a platform for the companies where they can easily configure the benefits that they want to offer to their employees. And employees, from that moment onwards, what they have is a Visa card in order to consume their benefits on the go with the money that will be taken out from their payroll at the end of the month. And they have an app where they can see all kinds of transactions and all kinds of savings that they have per each of those transactions. They can even donate part of the savings that they receive. And what's our business model? We're charging a SaaS quota to the companies per active employee. We have some revenue share with selected providers like health insurance, food delivery, and other providers. And we have an interchange fee that we are receiving from the Visa cards. Regarding the competitors, there is a clear difference between the classic players and the tech disruptors. And within the tech disruptors, there is also a very clear difference between the ones that have been focusing on HR for payroll, vacations, and so on, and the ones that are now focusing on employee products. These ones were founded 6 years ago on average, and the other one is a market that is just booming. And there is where Cobee is entering now. The team is composed by myself as the CEO, coming from McKinsey and OnTrack, Daniel, our CTO, coming from Last Minute, and Nacho, who's coming from Gympass. And these are some numbers. So this is our revenue growth curve since our funding in September last year. We built our first product in 3 months. With that, we did some tests. We started generating revenues in the following 2 months, and we had our first seed round by April this year. We're now transacting over 250,000 euros a month. That is growing month over month, and we have over 40 companies with an average penetration of 70%. So more than 70% of the employees of each of those companies are using our product. And why are we here? Well, we want to become the next Spanish unicorn, and we want to do that together with the best partners. So for a financial product like ours, there is nothing better than doing that with one of the best financial partners we can have. Thank you.
Thank you very much, Borja. I said before, one rule, that was the 4 minutes, but I didn't mention the second rule of the competition. The startup can choose the language, because we want to give them equally the same opportunities, because as you know, this is the Spanish competition of Open Talent. All of them, they are Spaniards. So they can choose, sorry about that, if one of them choose Spanish, and they are the choice. They are going to have exactly the same opportunities in this competition. Let me introduce you the second startup. We have Mi Capital. Miguel Carmiña is the CEO. Y Mi Capital es la banca privada online para pequeños y medianos ahorradores. Así que, Miguel, el foro es tuyo. Adelante.
Gracias. Bueno, seguramente muchos de vosotros en algún momento os hayáis hecho la siguiente pregunta. ¿Qué puedo hacer con mis ahorros? Quizá porque estéis pensando en compraros una casa, en independizaros. ¿Queréis cambiar de coche o compraros un nuevo coche? ¿O tenéis claro que este verano sí que os queréis ir de vacaciones? ¿O simplemente queréis sacar una rentabilidad extra a vuestros ahorros? ¿Y qué puedo hacer? ¿Cómo lo hago? Pues puedes desplazarte a tu sucursal y preguntar, oye, tengo X dinero para invertir, para conseguir estos objetivos, ¿cómo lo hago? Pero no creo que nadie de aquí haga eso, ¿no? ¿Quién va a una sucursal? Que levante la mano quien vaya a una sucursal a preguntar qué hace con sus ahorros. Me lo imaginaba. La otra opción es dedicar nuestro tiempo y conocimiento a estudiar los productos financieros que mejor se ajustan a nuestras necesidades, a nuestro perfil de riesgo. Y como he dicho antes, esto requiere tiempo y conocimiento. La solución. Soy Miguel Carmiña y vengo a presentaros Mi Capital, la primera plataforma que te ayuda a ahorrar y a invertir tus ahorros sin tener que mover el dinero de tu banco. Desde nuestra plataforma vas a poder tener control de tus rentabilidades, los productos de inversión, cómo de optimizada está tu inversión y si tienes que hacer algún cambio. Y además puedes chatear con nuestro asesor. Hemos buscado un modelo totalmente diferencial. Lo hacemos en tu banco, no tienes que mover el dinero del banco. Lo hacemos de forma 100% online, para evitar que tengas que ir a una sucursal. Somos independientes. ¿Esto qué quiere decir? Que estamos siempre del lado del cliente. No nos pagan los bancos, no nos pagan los fondos, nos pagan los clientes por defender sus intereses. Y además estamos regulados por la Comisión Nacional del Mercado de Valores. ¿Cómo se hace? Hemos diseñado un proceso lo más sencillo posible, a través de 4 pasos en los que conocemos primero al cliente, definimos su perfil de riesgo, tenemos un chat con el que comunicarnos con el cliente y conocerle un poco más en profundidad. Por supuesto, le preguntamos en qué banco tiene sus ahorros para poder ayudarle en ese banco y construimos su cartera. Esto es lo que llevamos en Mi Capital en los últimos 22 meses. Son 650 inversores de pago al mes, más de 4.500 usuarios activos. Estamos ayudando a invertir algo más de 14 millones de euros con un crecimiento mensual del 20%. Hemos decidido romper con el mercado tradicional, donde el valor está en el activo. Mi Capital cree que el valor está en la confianza. Productos como Airbnb, Uber o Glovo, donde el activo no es el principal poder, sino la confianza del cliente, definen el modelo de negocio de Mi Capital. La intención de Mi Capital es el mejor y mayor asesor financiero de España sin el dinero de los clientes. Estas son las cifras solo en el año 2019. Llevamos una rentabilidad media de más del 10%. Estamos ayudando a invertir en un 40% más de bancos que en el año 2018. Hemos ahorrado más de 140.000 euros en comisiones a nuestros inversores y hemos analizado más de 14.000 productos solo en el año 2019. Y nos hemos centrado en el público más desatendido. Como vemos, hay muchos competidores, grandes bancas internacionales, bancas suizas, americanas, centrados en los ahorradores con altos patrimonios, alrededor de 400.000 clientes en España. Y mi capital se ha centrado en los otros 41 millones de cuentas corrientes que no tienen acceso a banca privada, pero que sí que tienen patrimonio para invertir. Y ahí es donde mi capital aporta su valor añadido. Tenemos un equipo multidisciplinar formado por gente que viene del mundo de la banca privada, equipo parte de tecnología y un consejo asesor que nos ayuda en la toma de decisiones. Y lo mejor de todo es que mi capital solo paga si ganas. Mi capital te ayuda a invertir tus ahorros y solo te cobra si te hace ganar dinero con ello. Y es la forma que tenemos de explicar a nuestros clientes que no hay nadie más interesado en recomendar buenas inversiones que nosotros mismos. Muchas gracias por vuestro tiempo. Esto ha sido todo.
Thank you, Miguel. Thank you very much. Right, 4 minutes. That's impressive. Well, are you ready for the third startup today, this morning? We have Finteca. The CEO, Jordi Dominguez, is going to explain us the solution about Finteca because he's bringing fintech to mortgage using proprietary technology to instantly qualify and process mortgages. So, Jordi, the forum is yours. Thank you.
Thank you. Hi. Buying a piece of real estate is usually the largest single financial transaction in a person's life. And most people do not have to get a mortgage. The challenge is that this experience is usually quite lousy. So we're trying to apply a fintech to mortgages, making this process more seamless. The problem? Well, there's problems on all sides here. For the person that takes out the mortgage, it's a painful process. For the lender, and for the intermediary, if there's one needed. There's pain points everywhere. We're in a cycle where the lender wants more information. They feel they don't have enough to take out the mortgage. The lenders are shutting down branches. There's changes in regulation. Everything abounds to have pain points everywhere. So how do we fix some of those pain points? Applying technology. We apply technology to optimize the mortgage supply and demand, improving UX not only for the stakeholders, but also the engagement those stakeholders bring to the table. For the borrowers, we have a faster and more transparent process where they don't only get a mortgage qualified from one player, but from multiple lenders, which makes their experience not only faster, but also more likely to have an outcome of a successful transaction. From the lender side, we give them more visibility to supply and demand of mortgages, improve the UX with the user because we're giving them more options at the price they're more likely to like. And also, we'll let them have more engagement with the user because we'll let them approach users and engage users that may not be traditionally in their usual range of action. For the intermediaries, if there's one needed, we help them with the change of regulation. We help them approach more end users. We help them interact with more banks. Increases the likelihood of a successful transaction, which is a good outcome for all stakeholders. How does it work? We have two commercial brands, one for B2C, which is Finteca, and one for B2B, which is ProHipotecas. The user data is uploaded to a system. Instantaneously, we qualify the person's credit score. And we know that moment whether the person is qualified to get the mortgage or not. If that person's outcome is good, we send the data to the bank, who in turn gets a very qualified lead for the bank to issue a mortgage. As you may see on the list of banks we have here, there's one missing. Yes, we're talking to you guys. That's also where we want to have more engagement with BBVA. The banks then send us the information back, and this information is presented to the final user, who in turn sees what type of mortgage it can qualify for, and what price it is, and the transaction that could take up to 2 weeks has been cut to 2 to 3 days. So for the user, there's a faster resolution and more qualified, so the transaction has been improved. Who is their team? Where these people come from? We come from all sides. There's tech, there's finance, and yes, there's banking. We have a lot of experience in banking, in traditional banking and in new banking, because we think that you need a wholesome team that has all the pieces together. We know what a mortgage is like. It's a very paper-based process. We're digitalizing, we're making it fast. We know how finance works to understand the process, and there's technology. We have machine learning technology already embedded in it to make this process functional. So this is us. We're bringing improved experience to mortgages, credit scoring, applying technology to make sure that the purchase of that dream home or that dream apartment may happen faster, more seamlessly, and a better outcome for all parties involved. Thank you.
Thank you. Thank you very much. Next startup of the competition is Lucas. Lucas is the name of the startup because the CEO and founder is Steve Eitenhead. And Lucas says that it's making home ownership accessible for first-time buyers. Steve? All right, so we have a change. Sorry about that. No problem. We were warming up a little bit, Lucas. Lucas will come later. Firstly, we have Alfonso from FinWeg. Alfonso Recio is the CFO. And FinWeg es la plataforma de nuevos medios de pagos electrónicos sobre tecnología blockchain, que facilita la oferta de servicios a las entidades financieras. Alfonso, ready?
Yeah.
You have your 4-minute speech. Thank you.
Hello everybody. Let me start with a quick question for all of you. Do you know how many transactions are being done in Spain through promissory notes or paper checks? Well, the figure is 100 million promissory notes in Spain every year and 100 million checks. Well, this is our value proposition. In FinWeg, we have developed a new digital payment solution based on blockchain technology. We want to collaborate with financial institutions in order to make them more efficient and offer new service to the clients. We have two main pillars in our value proposition. There's a first part, which is the cost efficiency and optimization. This is mainly driven by the fact that we are changing paper to digital and that the technology underlying our solution is blockchain. We have operational simplification and elimination of fraud. These are elements that is not only us who said it, is the World Economic Forum. But we believe that even more important is that we are generating new revenue streams for financial institutions. Well, this is a graph that we went to a presentation of Deloitte Financial Consulting that explains that even though 84% of the volume of transactions that are being processed by the banks comes from corporates, only 54% of banking revenue come from corporates. There's a huge gap and an enormous potential. Banks, in the last years, they have been focused on the retail and the final consumer, the corporates have been not addressed properly. This is what we believe and the value proposition we are generating. I put you the example of a promissory note that I pay my suppliers with. With that paper, the bank has no traceability of it until my supplier go to the bank and make the discount. With FinWeg, the financial institutions have instant traceability of that promissory note, and they can offer discounting facilities or factoring to those potential customers that they don't have now. Furthermore, they have the ability, if that company is not a bank customer, they can offer promotions in order to make that client a new customer for the bank. This is a huge potential, and this is thanks to FinWeg. We have a very strong team behind this project with more than 25 years of experience providing software to the financial institutions, so they really know the needs of the banking. Through all these years of experience, we have identified the flaws and the problems that the current system and the current payments that are used in the corporates have, and that is why we have developed this solution. Where are we now? We have already passed the proof of concept with Bankia. We've been awarded with the Oracle Silver Partner Award, and we are part of Oracle Cloud. We are trying to focus and work with Oracle with their commercial power in order to be more present in more banks. We have very hot leads that we are working on converting them in new contracts and new proof of concept. Our idea is to be present in more banks during the next years. And we have our main target, to be present in the North American market, where the figure of paper is just crazy. It's 19,000 million paper checks every year in the US. And finally, when we have two banks in different countries, we will be able to attack and be part and offer new services in the international transfer market. So if you need further information, thank you for the opportunity. And we are in stand number 70 if you need any question. So thank you very much.
Thank you very much, Alfonso. Great speech. Next startup we have today, Funding. Funding, we have the CEO, Nacho Bautista. And this startup is the platform that democratizes the investment in renewables. Nacho, are you ready? Yes?
Thank you.
There you are. Thank you.
Thank you. Hello, everybody. I'm Nacho Bautista, and I'm the CEO and co-founder of Fundin. Probably you guys have seen that the renewable energy sector is racing again, but it is not racing for everyone. It is racing for big electricity companies and investment funds. People who invest in huge facilities of up to 40 million euros. And they do so thanks to their investors, high-income people obtaining profitabilities of above the 10%. This is something that I realized while working for these companies where we used to evaluate and manage facilities and projects for this kind of investment funds. But I have good news, this is no longer the same. Funding is the first crowdfunding platform authorized by the CNMB that democratizes the investment in renewable energies, allowing you to make impactful investments from as low as 500 euros. But how does it work? Well, projects come to us and they need to pass through a technical analysis. Once they do so, they need to pass also a financial analysis, and we seek for projects with a profitability of above the 6% for our investors. And after that, a legal analysis, a legal due diligence is done by an independent legal firm. After that, published on the platform, and we need the other part, right? We need investors to sign up and decide in which projects they want to invest. After that, if they invest, we will get the projects funded. And for the investor, how does it work? Well, as I said, you need to sign up. You need to sign up in our platform in order to comply with all the anti-money laundering regulations and so on. You select the project where you want to invest, and after that, you invest on it as much as you want, from as low as 500 euros, as I said. And after that, you will be able also to manage your portfolio. Actually, we are launching a brand new app, mobile app, in the upcoming weeks, and you will be able to monitorize all your investment through there. Up to now, what have we achieved? Well, more than 400,000 euros invested in our projects. These projects will be able to avoid up to 2,500 CO2 emissions to the atmosphere, and we've done so thanks to our investors. Over 1,900 investors sign up in our platform. And I also want to show you how we are growing in investor sign up. This is actually the huge rise is when we launched our first project in February this year, when we got the authorization from the CNMB. Well, we are collaborating with other companies such as big banks, and we want BBVA to be there as well. We are trying to incorporate our investment products into their offering. We are also collaborating with big legal firms to make independent due diligence, legal and technical due diligence over the projects. And we are also collaborating with other startups that share our values, such as Awara and Holaluz. We've done this thanks to the team, composed of me and Adrian, the two founders. As I said, I come from the renewable energy sector. Adrian has been doing public and private huge tenders in the services industry. And I is more than 15 years in the marketing sector, in the marketing in startups. Jesus has more than 15 years of experience as well in financial and consulting services. And then we have also Danny, our legal counsel, Javier, head of compliance, and Victor and Guzman, who are leading all the technological development of our platform. Plus 6 more people in the team also working full-time with us. So now that you know how to invest in renewables, I encourage you to go to www.funding.com and see our last project, which is currently open. Thank you very much.
Thank you, Nacho. Thank you very much.
Thank you.
5 startups already pitched, and now we have 5 startups ahead. Before I'm going to tell you something, just to remind you that after the startups, the jury, who is already evaluating everything, will be, after the pitches, deciding who is going to be the winner of Open Talent in Spain 2019. And all of you are invited in the meantime to have a coffee. We will have a coffee break on this stage, in Innovation Stage BBVA in South Summit. So all of you are invited to come here, to have a coffee, to relax, and then at 12 o'clock exactly, everyone will be here expecting who will be the winner. It will be the winner announcement. All right, everything clear? That at 12 o'clock, everyone must be here to check who is going to be the winner. So next startup is Grimco. With us, we have the CEO, Jorge Portillo, and Grimco is a technology and innovation in the service for sustainable development. So Jorge, thank you very much.
Thank you. We all are facing the biggest challenge in human history, climate change. I'm going to introduce you how BBVA and Grimco can work together in order to mitigate this environmental crisis. Current economic development is not sustainable. Funds for public and private investors are needed in order to bring innovation and technology so we can develop in a more sustainable way. Grimco is part of this solution since it facilitates financial institutions to bring this technology to companies in order to achieve United Nations Sustainable Development Goals. The opportunity is huge. Already last year, sustainable debt market reached 216 billion euros. Out of these, 4 billion euros were issued for green loans. If the market continues like this, it will reach up to 185 billion euros by 2023. And you know what? The time is now. Last Monday, top world banks committed to align their lendings with the Paris Agreement. And also here in Europe, the sustainable finance taxonomy was just approved. And also huge investments are needed in order to reach the net zero carbon emissions economy. And BBVA president stated, the future of finance lies in financing the future. But how is BBVA going to know the environmental performance of their customers? BBVA know very well, and financial institutions know very well the financial performance of companies. Revenue, sales, cost, they can compare with the peers, they can establish a lot of ratios. We do exactly the same thing, but for environmental performance. It will bring you a lot of information about how these companies are doing environmentally wise. So you can also compare among them and know how they are doing, and if they get a loan, how they are improving the environmental management in order to get the Sustainable Development Goals. We developed the very first software that captures automatically all the data for environmental management and report, including carbon footprint. It will accelerate all the environmental management and performance so you can take wisely decisions in order who to give all these loans. We save nowadays up to 90% of the resources needed to do all the environmental report, compliance, communications, and all the data needed for this purpose. We also comply with the Green Loan Management Association's principles, published by the Loan Principles Association. These are some of the companies we are working with. The good news is that we are already scaling up the scale of the projects. We put 45 years of experience in environmental management, carbon footprint software development, and also digitalization. I see a strong match between BBVA and Grimco in order to achieve the United Nations Sustainable Development Goals. I'm George. I'm happy to collaborate with you.
Thank you, Jorge. Thank you very much. Next startup, we have Lisa Seguros Inteligentes. With us, we have the CEO, Pilar Andrade, and Lisa says que hace los seguros más simples, transparentes y ágiles. Y también, ¿por qué no?, más sexys. Adelante.
Buenos días. Gracias a BBVA por esta oportunidad. En LISA formamos el equipo tecnólogos y profesionales del mundo del seguro con más de 20 años de experiencia. Las empresas, los profesionales, los freelance que se crean en los últimos años son mucho más digitales, pero las compañías de seguros y la distribución en general no se está dando cuenta de que siguen teniendo procedimientos muy antiguos, largos cuestionarios, poca transparencia y falta de agilidad. Por eso en LISA nos propusimos un reto, hacer más fáciles, más simples, más transparentes y, por qué no, más sexys los seguros. ¿Y cómo lo hacemos? Con una usabilidad muy estudiada, pantallas sencillas que se leen con facilidad desde cualquier dispositivo, ayudando al usuario a elegir. Con el foco puesto en el proceso de compra, el cliente elige lo que quiere asegurar y solo paga por lo que necesita. El usuario está totalmente en el centro de decisión. Somos agencia de suscripción 100% online, la primera autorizada en España, con la autorización concedida desde el pasado mes de julio. Hemos elegido este modelo de distribución porque para nosotros, junto con los partners con los que estamos trabajando, nos permite crear productos totalmente aplicados a nichos muy concretos, incluso con nuevas modalidades de seguros on demand, real time, y vamos a poder diferenciarnos del mercado totalmente de la oferta que existe actualmente. Tenemos la mejor tecnología en movilidad y lo mejor de todo, lo hemos hecho nosotros, in-house, lo que nos permite conectarnos en procesos de compra, integrarnos con terceros, incluso con Open Banking. Vamos a ver un vídeo de Lisa. Lo realmente disruptivo es cómo nos relacionamos con las personas, con un trato humano y cercano. Atendemos a nuestros clientes personalmente y buscamos las mejores ofertas para ellos. Estamos creando productos que nos permiten llegar al mercado, reduciendo el time to market de una manera muy adaptada a los diferentes convenios y acuerdos que estamos realizando actualmente. Ya tenemos clientes con los que hemos hecho conceptos nuevos como Insuran in a Box, en el que tangibilizamos el seguro para ciberriesgo y para otros riesgos. Estamos adaptándonos con total flexibilidad a los medios de pago que requieren los usuarios y tenemos un potencial en este mercado de 5,2 millones de clientes autónomos, profesionales, pymes, en los que podemos trabajar solo en el mercado nacional, que necesitan bajo regulación muchos de los seguros que les podemos ofrecer en diferentes ámbitos. Actualmente estamos buscando partners y inversores para seguir avanzando con nuestro proyecto y somos la agencia que ha creado 100% los seguros digitales, más flexibles y bueno, gracias.
Pilar, thank you very much. You have to give it to the next startup. Thank you very much, Pilar. So before we have Lisa, now Lucas. There are names of the startups, no name of people. The CEOs are different, you see, right? But it's okay, it's curious. We have two startups with different names. Now, yes, we have Lucas. With us, we have the CEO and founder, Steve Eitenhead. And Lucas is making home ownership accessible for first-time buyers. So, Steven, are you ready? Yes, sir. The time is yours.
Good morning, everyone. Let me tell you about Lucas. Lucas is making homeownership accessible and flexible because we believe that people should have the benefits of having access to homeownership without sacrificing a lot of today's flexibilities. Why are we doing this? We see that today in cities, people are spending over 40% of their income in rent alone. This is not allowing them to save some money in the future. And when you need 20 to 30% of a down payment for a mortgage, you're not able to save that amount of money anytime soon. So we see it as a vicious cycle. To give you more context, in the US, the UK, and Europe, 71% of millennials are spending money on rent. And this is because they can't afford a down payment or because current lifestyle patterns do not adapt to ownership structures. At the same time, we see these problems with banks because they can't take all the risk of giving too much of a mortgage of LTVs for people. So we find a way to give a solution. We're providing a rent-to-buy model, which is accessible and flexible financing for first-time buyers. How does it work? Instead of needing 20 to 30% of a down payment, tenants can actually access only with 5% of a down payment and buy the property that they choose. So they choose a property, Lucas will come up with the remaining 95%, we'll buy it for them, we'll lease it back to them, and with the option to buy it at a predetermined price, and through the rent, they will acquire enough equity until one point they can access a mortgage. What happens? In 3 years, we want our customers to have 10% of the equity in the apartment. And then they have flexibility. They can choose. It's their decision. They can either access a mortgage, and we act as a bridge, helping them get financing, or they can extend or try to upgrade to a different property or apply for a 5% back. Try it before you buy it. We do this by aligning interests, not just with the real estate sector, but also with the real estate capital and the tenants, making sure that everyone works together to make this worthwhile. To doing this, we make sure that everyone wins, and that's when we win. Real estate investors win because they get 5% upfront, they get higher IRRs, and at the same time, they have more cost-effective ways of investing. Real estate agents benefit as well because they can increase demand on the properties they can sell, reduce the sales cycles, and also have more sales. Tenants, they have access to home ownership, they're part of the property ladder, and they can build on credit scores as well. When this happens, we win by transactions, making sure that everyone's happy operationally, and at the end, making sure that our tenants actually have a home. So to do this, tech is at the core, and we find this in distribution, quick approval, underwriting, and operations. Distribution, making sure that the real estate agencies have platforms that can facilitate how to calculate the risk for people and for apartments. Quick approval using open banking software and risk algorithms. Underwriting, making sure the properties are in line with the investment portfolio, and operations. Why are we good for banks? Because we're helping people get mortgages. They also have part of their team be part of the impact investing, helping people have access to their first homes. We can educate clients financially for a better future. They can provide microloans, and we can have validated projections for future forecasting. Now, the volume that we see in the Spanish market is pretty huge. Think about it. There's over 7.5 million millennials renting today. And then there's over 6,000 real estate agencies. If we align those interests, we can have a lot more transactions in place. And the market is massive. And we see that 2 out of every 3 person that rent in Europe would rather own. And 10% of the market today, we see in 2025 being a rent-to-buy model. So we're early in the stage. We're increasing our scaling opportunities with underwriting and then owner financing. And our approach has been recognized by international and local media. This wouldn't be possible without a team coming from San Francisco, New York, London, Latin America, and Madrid with a real estate and fintech background. So thank you. That's Lucas.
Thank you, Steven. Thank you very much. Next startup, Urbanitae. With us we have Diego Bestard, es fundador y CEO, y Urbanitae es una plataforma de crowdfunding autorizada por CNMV y Banco de España que permite invertir en grandes proyectos inmobiliarios con cantidades pequeñas. Diego, adelante.
Gracias. Hi everyone, it's a pleasure to be here. Like Pedro said, I'm going to talk to you about Urbanitae, and Urbanitae is a platform that crowdfunds large real estate projects and makes everybody be able to invest in them. Now, I want to start with a question, and it's a question based on a feeling that made us create Urbanitae. And it's, don't you get the feeling when you're walking down the street, you see those beautiful big buildings, big commercial properties, don't you get the feeling that those properties always end up in the hands of professional investors? I mean, I certainly did, right? So through Urbanitae, we focus on bringing those types of opportunities to a crowdfunding platform and allowing anybody to invest in them with small amounts of money and zero hassles. Because let's face it, I mean, investing in real estate makes a lot of sense. It's a great way to build a portfolio, it's a great way to diversify your funds, but it's definitely got some drawbacks. Number one is the access to opportunities. Like I said before, and what we've been seeing on our end is that the best opportunities in real estate never make it to the small investor. They stay within the best professional investor network. Through Urbanitae, we crowd small and middle and mid-sized investors to have enough capital leverage to be able to compete against these large real estate funds. Number two is diversification. I mean, this is rule 101 in the investing manual, right? You want to diversify your money, don't put all of your eggs in one basket. Well, the problem with real estate is that when you invest, generally you need to put a lot of money down on a single property. So you're taking a lot of risk. Through Urbanitae, you can take that ticket size, chop it up into 20 or 30 pieces, and invest in all types of real estate in different projects. And number three is the management of the property. Anybody who has ever invested in real estate knows it's not something you throw money at and then sit back and relax, right? There's a lot of work involved, from the purchasing to the renovations to tenants. Well, through Urbanitae, you're investing into a professional developer that does this for a living, and I assure you they do it better than you and I can do. Some of the examples of things we've done in the past we've looked at. Up top, you see commercial real estate. This is generally income generating through rental. We've done supermarkets, gas stations, prime commercial real estate. And at the bottom, you see build-outs you buy buildings, you fix them up, you sell them for a profit. And the returns are, great money for an average small investor. How does this all work? Well, it's pretty simple. It's very similar to other crowdfunding platforms. We have a large network of developers that bring us a bunch of opportunities. Our analysis team analyzes first the developer and makes sure that they're a good one, and second, the project they bring us. And once we find the best developers and the best projects, we put them up on our platform so that everybody can invest in them. Once we fund those projects, the developer takes care of building out the system, purchasing the property with that money, and then any proceeds that are generated through rental income or from capital gains once the property is sold are distributed amongst investors. How big is this market? Well, this is one of those markets where the numbers don't really make sense, right? I mean, these are estimates, but it is estimated about 100 billion euros in transactions last year, and about 10 to 12% of that is just investment properties alone. This means that with our goal of doing 40 million in the first 12 months, we're not even touching a 1% of the market. This is a gigantic opportunity. How do we make money? Well, I try to simplify this as much as possible. I call it the rule of 5. Currently, we charge 5% of everything we raise through our platform. And in the future, and especially in other markets, we will also charge a 5% of rental income generated and a 5% of the capital gains. We have a great team. Everybody says they have a great team. We really do. You're only seeing 10 people here. It's actually 12 of us now. We're growing really fast. We didn't quite have time to put them up here, and 10 just look better. So anyway, we're growing. We have a team of people that have been in the sector for a long time, and that's what we do. So I'll leave you with a question, and we started with one. And my question is, why are you still investing in real estate the old-fashioned way? There's a new generation of investing. It's faster, it's simpler, and it's a hell of a lot smarter. That's Urbanitae. Thank you.
Diego, thank you very much. And last but not least, the last startup. The name is Guniverse. With us we have the CEO, Abel Navajas. And Guniverse is the mobile-first tax-free operator. No more queues and no more forms. Are you ready, Abel? You have the form.
Thank you very much.
Thank you.
Thank you. Morning. What would you think if I told you that in the middle, that in the middle of the forest of digital entrance in the travel industry, there is still a travel service that is completely undigitized. I'm speaking about the tax-free shopping. Show hands. How many of you are travelers? Hello? Okay. How many of you shop while I travel? Great. And how many of you shopped without taxes? At least once. Just 3. Just few people, few travelers use this service. Just almost nobody repeat. So imagine you are in the plane, you land in an unknown country, you go to the hotel, then you go to a store, and you find a QR code. Then you take your mobile, you download the app, and once you are in your hotel, you take a picture of the receipt, and when you leave the countries, when you are in the airport, you take again your mobile, you scan a QR code at the kiosk, and then you get the money back in your wallet, in a credit card, in your bank account, in your currency. Imaginaros que ahora puedo hablaros en castellano, pero ¿cuántos viajeros vamos a otro país y no saben el idioma de donde están comprando? Y tienen que pasar por un proceso totalmente burocrático para poder ejercer sus derechos. Nosotros, en nuestra plataforma, guiamos al viajero durante todo el proceso de una manera muy delicada, muy cuidada, robotizada, pero con humanos reales detrás. La idea es que no tengas que interactuar con nadie en una lengua que no es tuya. Ahora mismo tienes que llevar el pasaporte, enseñarlo en la tienda, rellenar formularios, encararte con un vendedor que no tiene ganas ni le apetece hablar de esto. Luego llegas al aeropuerto, lo mismo, no sabes dónde está, te pierdes, no lo reclamas. 15 minutos contra 90 minutos. Esto es tan fácil para los retailers que lo pueden ofrecer como que no tienen que hacer nada. Todo se hace en el app y por parte del traveler. Hablamos de un mercado en Europa de más de 8 billones. Solo en Europa. Primera y segunda potencia del mundo en turismo. Francia, España. Si unimos Italia y Portugal, cogeremos gran parte del turismo mundial. Para poder hacer esto, hemos montado un equipo con la experiencia en el mercado, en el sector, con la experiencia de emprendimiento y con el liderazgo tecnológico. Aparte, un equipo fantástico, que lo tengo aquí en la esquina, al que saludo. Hola chicos, con una mezcla muy de perfiles muy seniors, perfiles jóvenes, para poder crecer a largo plazo. Muchas gracias.
Thank you very much, Abel. So that was the last speech of today of the Open Tunnel Final Spain 2019. But before, let me do just the last announcement before to have the break. The first one, don't miss the content that this morning we are going to have in this stage. We are going to talk about this A. Do you know some of you, why we have this logo? So later on, after the announcement, we'll have here the experts that they are going to explain you what happened here and about the corporate logo. Secondly, also we will talk about behavioral economics. We will talk about also quantum computing, and as well certain topics related to sustainable finance and the 2 challenges that we are launching here in South Summit by BBVA. So don't miss all this interesting content. And before that, we'll have, of course, the announcement of the winner of this Open Talent competition. That will be at 12 o'clock. All right? So everyone, you are more than invited to have here a coffee networking. I'll see you later at 12 o'clock. Thank you very much. Good morning and welcome everyone again. Thank you very much for being here. Are you ready to know who is going to be the winner of Open Talent Competition Spain 2019? Yes or no? Yes? Good. So this morning we had an amazing final. We were listening the 10 pitches of these startups. Were amazing solutions. And we are going to have the rest of the morning interesting content. As you know, we are going to talk about discuss about behavioral economics. We are going to discuss sustainable finance. What is quantum computing? Or what is happening with this A? As I'm looking forward to know why we changed the logo. They are going to explain that now a little bit later. It's such a very interesting topic also. But first is the final. So I'm going to introduce you to members of the jury. Luis Simoes is the head of enterprise clients at BBVA Spain, and Ángel Muñoz is the head of retail business at BBVA Spain. So please, can you please come to the stage? Because they will be the ones that are going to announce the name. And I have here the mic to the winner. So the winner, all of the startups are here. The winner will have 1 minute speech if you want to say something also. And then an official picture, of course. So, Luis, tell us, please, what you were thinking in the jury member and who is going to be the winner of Open Talent Competition.
Pues en español, ¿no? Si queréis.
Como quieras.
Pues nada, que la verdad que enhorabuena a todos los finalistas. La verdad que contar en 4 minutos lo que muchas veces es el sueño de una vida no es fácil. Y enhorabuena a todos. Y tuvimos que decidir, el jurado, no de una forma fácil, porque la verdad que había ofertas muy interesantes y pitch muy interesantes, y tuvimos que elegir finalmente un solo ganador. Y eso quizás es lo más difícil. Todos los jurados finalmente hemos elegido un solo ganador, y el ganador es... Kobe.
¡Kobe! Aquí en medio. Congratulations. The camera is here. Cool. Congratulations. Some words to the public. You were the winner today.
Yeah, well, thank you very much for organizing the contest first. It was super interesting. And well, thank you for assisting and for the recognition.
Cool. An applause to the winner and also to the finalists. And as I was mentioning before, all of you, they are going to receive an acceleration program with the IE Business School. So also congratulations to be finalists. That was not difficult. Over 800 startups this year were participating in this competition. And to be one of the 10 best is not that easy. So all of them, congratulations and thank you very much. Please. Thank you very much. Let's continue the morning. A picture. Yes, a picture. So let's continue this morning. As I was mentioning before, we have a very interesting content provided by BBVA in this innovation stage at South Summit 2019. Exciting content. We are going to analyze the trends, what the experts of BBVA, the execs, are going to tell you this morning. Don't miss anything. So to start this second part of this morning, we have with us, I'm going to tell, are you ready, speakers there? I'm going to name Brian Farrell, he's the Executive Creative Director at BBVA, Heather Spratt, Brand Director at BBVA, and Carlos Bernabeu, CTO or co-founder of Mi Capital. Force applause to all of them. Thank you very much for being here.
We need a chair. Yeah, do you want to sit in my knee? Hay otro ataca. Ahora pedimos una. No, es que si no. Okay.
You can sit. Oh, perfect.
you want to go in the middle?
Okay, thanks. Brian, do you hear us? The microphone? Does yours work?
Can
Yes.
you hear me? Yes.
Sí, ahora sí. Okay, so yeah, thanks Heather, Brian, for joining me. I think the topic is quite interesting. So let's get on to it because we have, I think, 20 minutes. So the first question is, the logo. Why change it? What was the idea behind it?
Okay, well, we'd already been on a roll thinking about what we were doing with our branding and how we could become more global, move towards a global brand, which was kind of difficult when we have 5 major markets which had sub-brands. So that was one of the main reasons. Secondly, we were seeing that internally we have like a huge push to become super digital. But then we were seeing that our logo and all our visual identity wasn't keeping up to space with that change. And then also we had a logo which hadn't been retouched for the last 25 years. So to talk about becoming a leading digital player with that logo was kind of out of sync.
I think it looks fantastic.
Thank you.
So congrats. The second question here is actually, BBVA is a huge enterprise. So, what are the steps involved, to plan and prepare for this kind of project?
Okay, well, as you can imagine, to move an organization of over 130,000 employees is not an easy task. So first of all, I think the most important thing to get started was having internal buy-in from the top management. So once we had that, then we did like a roadshow, kind of like the Rolling Stones, to all our countries to explain what the project was about, what were the objectives, and also let people say, well, I'm fantastic in Mexico as BBVA Bancomer. I don't need to change. I don't need to become BBVA. So just listening to people, letting them express their concerns, talking about their barriers, and then doing market research. That was critical because to push the organization to make such a change to become a single global brand, which has a huge investment, as you can imagine, well, you're not going to do that without having some figures that are saying, Brian and I think we should do this, but we're going to do our best not to destroy the business. So we did lots of market research. Once we had that case that was saying, okay, we're good to go, we came back to global and we started to set up the teams and then mirroring those teams in the local countries.
Yeah, I think that part was actually one of the most important parts from the execution of the logo is we put together a design team of designers in our different local teams. So it wasn't just coming out of holding. We obviously had a presence within our global team, but we also had a designer working on it in the United States, in Mexico, in Colombia, and we all worked together. So ultimately, when we launched the logo, everyone already had seen it. They felt like they were part of the process, and they felt really proud of the final result, which was really key.
And this was happening from Madrid. This was all organized from Madrid, right?
Yes.
Yeah. Nice. Okay. The next question would be, whenever you redesign something in a huge company like this, what were the objectives behind it, Brian?
Sure. I mean, as Heather said, when we went around to the different countries, obviously we had to explain the objectives of the logo change. We had just, in 2017, we had launched a new brand purpose. So obviously we wanted to make sure that the new identity represented the new brand purpose that we had in terms of creating opportunities. We were in a big strategic movement in digital transformation. So that was another really big objective, that the logo represented digital transformation. And then finally, when you think of it from a manual part or an executional part, when we're designing and putting so much focus on our digital products, we wanted to make sure that this was from a digital first approach and making sure that the logo scaled really nicely across all of our digital touch points, which can come from very, very small to really large.
I guess that a lot of people here could be asking, it's just a logo, but I guess that there's a design process behind it, and how long did that process take? How
Yeah.
was that process?
I mean, it probably took from the very first sketch on paper around 2.5 months. As I said, we put together an international team across our different countries. We worked both remotely for part of the time, and then we ultimately designed the final logo in Madrid. We brought everyone from the different local teams to Madrid for a week. We stayed in a room for 1 week making the final decisions. But from start to end, it was probably about 2.5 months, and then obviously once you have, this wasn't the only logo that we came up with. We had 3 really, really strong proposals out of that 2.5 months, and then that's when you start to create all the material needed to both sell it into the executives, but also to create all the material to test with users.
Heather, so Brian was saying that you had 2 or 3 proposals, but how do you make that final decision? How do you decide on the the final logo?
Well, it wasn't an easy choice because you can imagine with something as creative as a logo, everybody has an opinion. So you had like 150,000 people having an opinion about what the choice should be. So
We did not share it with the entire
But we didn't share it with
organization.
the whole organization. No, it eventually was a data-driven choice because it was we're a data-driven organization. So if we're going to make a huge investment, change our logo, it had to be a data-driven choice also. So we tested, I think, about 5,000 consumers who are clients and non-clients in our major markets. And what we looked for was that the logo, this new logo, obviously it had to perform better against the existing logo. It also had to reinforce what we stand for today, that we're a strong, solid financial institution. But also it has to talk about where we're moving forward, what we're talking about in the future. It has to talk about creating opportunities. And it has to make a bold statement about who's BBVA in the markets.
Yeah, I think this phase of the project was one of the biggest lessons that I learned. And I had designed many logos beforehand, but never at this scale. And the way that we made this decision, really based in data, like you said, a lot of times when you see a new logo and across these 3 choices that we had, people had different preferences. Obviously, logo is a very emotional thing. And when you see it for the first time, you typically have these emotions and these preferences toward one or the other. And in the end, what we saw was all 3 tested better than the old logo. So we knew we had a winner, and that was the good part. But deciding between the 3 was really important. And at the end, what we decided was we would make the decision based in the strategic intent of the organization. Our strategic intent for BBVA is we want to digitally transform. So it was the logo that best represented transformation, innovation, digital, those aspects that ultimately helped us make the final decision. And that was really important, something that was really impactful for me to see.
Heather, so after designing the logo, there's obviously a whole new identity to the to BBVA. So how do you implement and plan for that new identity?
Yeah, well, it's not easy. First of all, one of the major things we had to deal with was actually fixing a launch date, which changed several times. So once we had that launch date, so that D-Day, which was 15th of June, then it's retro timing, moving backwards. Before getting the calendars ready, we had to decide. So we'd set the day 15th of June, but maybe we were in February. So it was, what can we do? What is achievable from February until June that will make an impact? So we had like tiers of materials and achievables. So the first ones were obviously, our corporate buildings, our headquarters, we can't launch with a global campaign on the 15th of June, and then you go to La Vela, and the logo's not changed. That cannot happen. So that was one of them. We need to have our principal branches changed. We need to have our principal web pages where clients are interacting, they're doing their transactions, those should be changed. The global campaign needs to be ready, and then, phase 2, the other things. I mean, we're still
Splash screen of the
still
application.
rolling out, for example.
Yeah.
All the things that were really critical touch points with high impact for users.
Interesting.
Yeah.
I think this works now, so I'm gonna shut this one. So Brian, you were talking about testing with people, with real people, right? But what about the public? What do they think? That it's very important. Like the brand has to impact the public. So what was the decision there?
Sure. I mean, I think, like I said, logos are very emotional. They can be very. People can love them and people can hate them and people can be neutral about them. For us, it was really important that it was something that made an impact. So we didn't want people to be neutral. We wanted, and we knew that we were going to hear people that really did not like the logo and people that loved the logo. And for us, that was great. And I think, and also, people always think about or have an association of something new to something that they've seen. So you always hear, I think I've seen this or something similar to this logo. All these comments are very natural to hear. But for us, what was really important is that through all of this noise, both the negative, positive, and the associations with other brands in some part of the world, that we knew that we made the decision based on our brand purpose, which is uniquely ours, and it's 4 letters that are uniquely ours. So because of that, we weren't really worried and we didn't really get stressed out about all of the different comments that we heard. But also, I think what we did really nice was when we heard comments, we entered into the conversation. It was a lot of the material that we created with the brand team.
I mean, we had like some really, really funny comments from the design community, which was, this A going up, I can't deal with it, I need everything to be organized. It's really driving me crazy. So it was like, okay, what can you do? You can be pissed off about that comment, or you can go, well, yeah, he's probably right, but let's have a laugh at ourselves. So we did a lot of short videos on redes sociales, and we just kind of took a laugh at ourselves and enjoyed the feedback.
Yeah. I mean, obviously, for everyone here, that decision was very deliberate. The raising of the A. It represents prosperity, moving to an elevated level of life, which is very, very connected to our brand purpose. So we knew it would spark a lot of comments, but for us, it very, very much represents our strategic intent and also our brand purpose, why we exist.
Great, sounds great. I think it's bold, and I think people like it. So, okay, so after such a huge effort, how do you keep the brand alive and interesting in a bank?
Yeah, in a bank. Yeah. Well, I mean, we're lucky because we love our job, so. And we love the new logo, we love the work we're doing. But I think it's a change of mindset. Before people if you're people here working in branding or marketing, before it was very much, establishing rules, creating guidelines, and then they don't change, for the next 10 years. That can't happen anymore. Our guidelines are really short, really succinct. We're on top of the materials that are being produced. If we're seeing assets that don't work, well, let's go. Let's see what's next. Let's improve. So just keeping alive and looking out for things that don't work. I mean, it's not a failure. It didn't work. Well, let's improve it.
Mm-hmm.
Yeah.
Interesting. And I think as a final, question, the process seems to be pretty fun and interesting. Any tips? Any fun stories? Any things that you'd like to share with people listening?
Yeah, I think at first I would just like to stress that logos are really important for a brand, but I think sometimes people get too stressed out about them and they put too much emphasis on the meaning of a logo for a brand. And for us, what was really important is that we understood that the impression of a brand comes from more than just the logo. It comes from much more from your products and services. It comes from the connection of all of your touch points to create the full experience with the brand. That is ultimately what creates brand impression. And for us, the logo is important, obviously, because it's our signature, but we shouldn't push so much emphasis on it that it stresses us out through the whole process. We wanted to have fun with this process. It's a beautiful logo. It's really creative. We were making a really big impact. It was a really big step for the bank. And for us, it was important that we chilled out and had fun with it as well. And I think what really helped us to do that was understanding that, yes, the logo is important, but it's more important our products and services. It's more important our overall brand experience that connects all of the touch points with the user.
Interesting, very interesting. Well, thank you, Brian. Thank you, Heather. I think this has been wonderful to know exactly, from the inside out how the design process of the logo came to be. And from my side, congratulations, both of you.
Thank you. And I would just say, as we were mobilizing the entire organization, communicate, over-communicate. If you think you've told Mexico, the next steps are this, say it 3 times, because you think that people know what's going on, and sometimes they don't. So it's better to tell somebody 3 times than leave somebody out of the loop.
Totally right.
Yeah.
Thanks, guys.
Okay.
Thank you.
Vale, hecho. Thank you very much, Brian, Heather, and Carlos. Thank you very much. It was a pleasure learning a little bit more about corporate logos. And please, everyone, you can have a seat. You can come here. The stage is for you. Don't be shy. Just come here to the center. There is still free place for you. And welcome, everyone. I want to give 30 seconds, a little bit more, just to let everyone to sit down and to take their seats before starting the next panel. So hi, everyone. Welcome again to the new attendees that we have here on this stage, Innovate Stage at South Summit 2019. We are going to continue about talking about, in this case, extreme computing. Extreme computing. Quantum computing algorithm in finance sounds a very hot topic nowadays, about technology, about finance. And for that, we have 3 amazing speakers. We have Escolático Sánchez, New Digital Business Research and Development at BBVA, Enrique Lizaso, Managing Director and Founder at Multiverse Computing, and Roman Orus, Co-founder and CSO at Multiverse Computing at Iker Basque. Please, everyone, thank you very much.
Hey.
A ver, ¿dónde nos sentamos aquí?
¿Podrás hacer una foto a cada uno? Sí, sí, claro.
Well, good morning, ladies and gentlemen. Thank you very much for being here and listening to our quantum thoughts. You know what they say about quantum? They say that it's the dream of theoretical physicists and mathematicians and the nightmare of engineers. Okay? Well, my name is Esco Sánchez, as you have seen. Yeah, you can sit there. Okay, I sit here. Okay. And I'm in the research and development area of new digital business of BBVA. And today here we are going to introduce you a weapon to fight against exponentially hard problem. And please allow me the lack of rigor, the lack of accuracy, because when I say exponentially hard problems, quantum practitioners should hear MP hard problems. Okay. Well, let me give you an example of what an exponential problem in the financial sector could be. If we have 100 of assets, 100 of stocks, for example, then that's not a big quantity for a financial problem, because, for example, the Standard & Poor's has 500, S&P 500, and you want to calculate, you want to find the combination of those assets that is the least risky, the most conservative portfolio. If you go one by one, the solution is a sequence of yes or no to one question. The question is this asset in this portfolio? There are 100 assets, there will be 100 questions. 100 questions with 2 possible answers, yes or no, okay? This sequence, if you multiply this 2 times 2 times 2 times 2, 100 times, give you the number 2 to 100. It's a huge number. In order for you to know what the extent of this number is, if you, in each of the step, spend 1 nanosecond, that is 10 to minus 9, is 1 billionth of a second, the whole process will be thousands of times the age of the universe. That is all enough. It's 14 billion years, the age of the universe. But do not panic. Do not panic. We think that quantum has a word in this exponentially hard problem. Well, as I said, I'm in the research and development department of New Digital Business of BBVA. You know, in BBVA, our purpose is to bring the age of opportunity to everyone. In New Digital Business, we want to transform our bank. We want to be a global digital company, the first or the best digital bank in the 21st century. But not for whatever reason. We are also in client solutions, not for an arbitrary reasons. It's because we want to make the life of our clients better and easier. And we leverage on these technologies or whatever to achieve this target. In our department, we follow an approach that it's inspired by the deductive scientific approach or method to remain adaptable to the breakthroughs in society, in science and technology. But as I told you, always with the client in mind. Okay? This scientific method has 3 phases. In the first phase, you can state the problem, search the problem, investigate and research about the problem. Here the problem is exponentially hard problem. Okay? What's there? There is Moore's law. Okay, again, for the lack of accuracy, I know that Moore's law is not a law, but allow me the thing. Moore's law is facing right now, right these years, is facing the size of subatomic particle. It's not going to be anymore. It's facing the end. If you go tinier, you are going to face with quantum mechanics. And in quantum mechanics, things are strange and stranger. You will see. In the second phase of the scientific approach that we are inspired by this method, we form a conjecture, a law, an hypothesis. And it's our hypothesis that quantum is here to try to solve this problem, and it's going to have some advantage. I am not saying a supremacy, but I am saying advantage. And in our opinion, maybe as close as 5 years from now. Allow me for the lack of accuracy, that's an opinion. Okay? And the third phase of once we have the problem, once we have the hypothesis for solving the problem, we have to test our hypothesis. And to test our hypothesis, my colleagues here are going to tell you, after my presentation, are going to tell you how are we going to try to do this. Okay? So, as I told you, with this scientific approach, we always try to answer to 3 questions. The 3 questions is, what are we trying to do? As I told you before, we are facing tiny particles, we are facing tiny subatomic particles, and quantum has a word on this. And if quantum has a word on this, because in the things like electron crossings, physical barriers happen at these tiny sizes. Okay? The second question that we have to answer is, and the answer is that how is it done today? Okay? How is it done today? How do they solve this problem today? Today, engineers can handle tiny particles better than ever in history. So because of this, we are living this second quantum revolution. That's my opinion. Okay? And they are going to the qubits. It's an example with a bit. It's like if you answer your question and the answer is given by a German. It's yes or no, ja or nein, 1 or 0. On the other hand, if we consider the qubit, that is the minimum information unit for quantum computing, it's like an answer of an Spanish. It's maybe 1 or 0. I will decide when you measure me. Okay, that's the difference. Well, this superposition that is called mathematically This superposition is nothing more than a linear combination of basic states. It's a vector space, a complex vector space. And I will not go more with accuracy because it will end who knows. This superposition combined of one qubit, combined with the entanglement of several qubits. Okay, the entanglement is in quantum mechanics. The particles behave like this way, like entanglement, and this is mathematically a tensor product of vector space. The tensor product of vector space multiplies the dimension. Because of this, we achieve the exponentiality that we need for resolve exponentially hard problems. Okay, and the third thing that we must answer in our scientific approach is, what do we propose? After all this research, after all gathering all this data, we propose to build capabilities in quantum computing. We think that the espresso train of quantum is here. Behind the hype, that I recognize there is something hype. There's some hype in this world. Behind that, there is an espresso train. There is something very, very strong there. We have been in this line of research almost 2 years. We have been searching and researching in our line business and trying to find problems, candidates for this quantum advantage. Quantum advantage is nothing more than a problem that with quantum can be solved better than with classical. Okay, this is the thing. Well, you know, all this. As I told you before, that the quantum was the nightmare of the engineers and the dream of the scientists. Theoretically, the theoretical scientists, we know that it has advantage, that it has supremacy. Theoretically, we know it. But in practice, to put all this in practice, we need a number of qubits that engineers cannot construct right now. Because of this, it's an engineer nightmare, okay? But maybe not for so long. You know, a couple of weeks ago or 3 weeks ago, a vanishing paper. What would you expect? It's a quantum paper. It must be appearing, disappearing. It appears somewhere. Financial Times took it. A paper where Google, quantum artificial intelligence department of Google, claimed that the supremacy, quantum supremacy, is here. And well, if that is true, if their numbers are true, we also have a collateral benefit on this. If that is true, we could save in energy. Remember the Sustainable Development Goals and climate change. In terms of energy, we could save 4 years the electricity consumption of the whole country, of the whole Spain. So the chief of this department of Google, Neven, stated a couple of months ago a law, not a law, but a law, that said that quantum computing is increasing in a doubly exponential way. Maybe we are changing from Moore's law, that is double the capacity every 2 years, to Neven's law, that is 2 to n, doubly exponential. Okay, maybe we are there. Well, we are not sure of all this. Is our opinion, and but there are data behind all this. There are data behind all this that are going to tell us something about that. Well, Dario Gil is the head of research in a global basis of IBM. He told in a conference three months ago in CSIC that this situation of quantum reminds him of classical computing in the 50s of the last century. I'm going a little bit more with all humility, but for me, this situation is very similar to this photograph. Do you recognize people in this photograph? Yes, this is Manhattan Project. This stage of the humanity, for me, is very similar with quantum computing right now. There was a war, there was a race. There were the Allies, there were the Nazis, there were Oppenheimer, Bohr, and the former friend of Bohr, that was Heisenberg, the one who discovered the uncertainty principle, so he was a really intelligent man, in the Nazis, trying to build the A-bomb, the nuclear bomb. It was a race. Well, some bad language say that Heisenberg was delaying the project for the Nazis. And I tend to think that it was that way. Well, for me, we are in a situation like this, and can you guess what this drive to the current situation? This has changed the world, and maybe this is a tipping point also in the world. And also, when you go to somewhere, to conference, in quantum, you always see the army there. Because of that, that recalls me this situation, much that other things. Well, and we are not alone in this vision. There are. Do you remember what they say about technology at the beginning of the century? They say that in the US they invent, in China they copy, and in Europe we regulate. Okay, something is changing. Something is changing. In Europe we are still regulating, but look at these figures. The Chinese public investment. Okay, the Chinese are investing 10 billion in 5 years. The European and the dollars. The European Union and the States, more or less 1 billion. Okay, the Chinese are spending 20 times the money of the other two countries, and not only private, because if we talk about the Chinese Holy Trinity, Alibaba, that is their Amazon, Tencent, that is their Facebook, or Baidu, that is their Google, are adding 35 more billion to this equation. So think about it. And in the sectors, in the public sector of the Western industry, we ourselves have signed an agreement with ESIC, Airbus, that are there in the States, have a quantum challenge. JP Morgan and Barclays are in the IBM-Q network. Andreessen Horowitz investing in Rigetti. Morgan Stanley creating a quantum computer. It's a lot of people thinking about this. Okay, a lot of people doing this, and so I'm going to finish. As I told you before, problem, hypothesis, testing the hypothesis. We are now here. And we are trying to test the hypothesis with these guys, with Roman and with Enrique. Excuse me, I would prefer to use the word boutique instead of tiny, because tiny startup, remember me what Blockbuster thought about Netflix when they offered Netflix to Blockbuster. It's a child game. Look where is Blockbuster. They went bankrupt. They filed Chapter 11, and look where is Netflix. But I don't know now. But maybe with this, even with this plunge in the stock market, but maybe there are 30 billion of capitalization. So, thank you very much for stoically endure the pain of my speech, and I will be around if you have any question or whatever. With no more questions, with no more things, I will give the device and the floor to my friend Roman.
Thank you. Okay, so very briefly, thank you, Scolastico, for this very nice introduction. So very briefly about quantum computing, because I assume that most of you are not experts in quantum computing, and therefore you need to know a little bit about the idea of what the types of things that we can do here. Is not working the micro? Yes? No? Hello? 2. Yeah? Yes? Okay. Now it's working. Okay. So what's quantum computing about? So quantum computing is about a fundamentally different way of processing information, right? So nowadays we already use devices that to process information in our in our standard computers, and we have these devices that work with materials that we understand them precisely because we understand quantum mechanics, right? So we have semiconductors, we have conductors, insulators, then we have transistors and so on. And this is the reason why we've been able to build our computers nowadays. But quantum computing is fundamentally different. So here the difference is that we are going to be using the laws of quantum physics to process the information. And this is something fundamentally new that no standard computing is using nowadays. Now the point is that by using this, we have an advantage. We can do things that otherwise are impossible. Now, it's actually very interesting because with quantum computers we can do tasks that are exponentially more difficult. I mean, things that are absolutely impossible for a standard computer. So there is no way in some of these tasks that a classical or a standard computer will ever be able to match what a quantum computer will be able to do. Now let me give you a very standard example in the field of quantum computing, which is factorization. Now imagine that you want to to pick up a very large number, and you want to find its prime factor. So for instance, 15 is equal to 5 times 3, okay? Now, this is very easy if the number is small, but if the number is very large, and in particular if you have something like 2,000 bits, then it turns out that the problem is very difficult. And actually, this problem is the basis for a big part of our cryptography. So nowadays, our cryptography is secure. This RSA crypto system, the one that we use when we do transactions with the bank, for instance, this is secure because this problem is very difficult to solve, okay? I mean, there is no algorithm that runs efficiently to crack this problem. Now, if you do the calculation of how much time will you need to solve this problem on a standard computer, so the best algorithm that we know, it takes of the order of 10 to the 34 steps. You know, this is a 1 with 34 zeros, all right? And if you do the numbers on a today's standard computer, like my laptop, for instance, that they run at terahertz, clock time, you just put the numbers there, and it's going to take you of the order of 317, I think, trillion years. Of course, it means that the problem is you cannot solve it in practice, right? Now, if you have a quantum computer, there is an algorithm that solves this problem efficiently. It's called the factorization quantum algorithm, and it runs in 10 to the 7 steps. Now, if you put it on a quantum processor like the ones that Google and IBM and so on are developing nowadays that run at the order of megahertz clock speed, then essentially you solve the problem in 10 seconds, right? So this is just to give you the difference, to give you the idea that this is really a change of paradigm. So we are changing the rules of the game. Things that were not solvable at all until now, once we have a quantum computer with something around 2,000 qubits, it will be possible to solve them, right? And in particular, that's going to affect essentially every field of technology that we know. I mean, it's going to affect technology, it's going to affect cryptography, security, cybersecurity, and so on and so forth. This is a very extreme example, but it's just to give you the idea. Now, what is exactly a quantum computer? So nowadays, there are several players in the game, IBM, Google, as I was mentioning, there are others. Typically, you can imagine a quantum computer like a fridge, okay? So like the fridge at home, like where you put the vegetables, and the reason for this is that the units of information for a quantum computer, they need to be cooled down to millikelvin. Actually, the fridge looks something like this. This is the one at IBM. The whole machine is actually the fridge, and the processor is just below. It's very small. It's something like this. And that's where your quantum units of information are living. Now, the whole story is just to cool down your processor to millikelvin. Now, millikelvin is 1,000 times colder than interstellar space. So this is very, very cold. It's one of the coldest places in the universe. And this is why this is a nightmare for engineers, because how the hell do you do that, no? On a place that, doesn't blow up or something like that. So that's how a quantum computer look like. The technology is starting to be ready, and this is why we are getting very excited. There are different types of quantum processors. Some processors are tailored to optimization tasks. They are called quantum annealers. Some others are tailored to more universal tasks. They are called universal quantum computers. Some others use light, okay, lasers. They are photonic quantum computers, and so on. Now, the point is that we are getting to the point where we start to see things moving. Google and IBM, they say they have of the order of 52, 53 qubits, which is this unit of information. With this, we can already start to prove that there is an advantage. I mean, we can do things with these processors that otherwise are just impossible. Now, the forecast is that in the next 5 to 7 years, the field is going to develop a lot, and we'll start to have processors that will be useful to do tasks in industry that will be extremely useful, all right? This is a graphic by Gartner, which I think is very representative of what is going on here. So on the horizontal scale, we have the time to market of several quantum algorithms and quantum applications. In the vertical scale, we have the impact. And you can see that some applications of very high impact, they are already very to the left, all right? So this means that in a short period of time, kind of medium term, we are going to be able to do things already with these quantum processors that are going to be useful, right, for industry. And so the next part of the talk, so it's going to be Enrique, and he will tell you especially how we are going to be using this for finance in particular.
Thank you very much, Roman. Okay, we have been talking about quantum computer and so on. Let's have a look at what we are going to do at a really big bang like BBVA. So basically, the problem with finance is, okay, you know that we have some of the brightest minds worrying about economy, finance, and so on. But the problem, as you can say, is, okay, if these people are so clear, how come that we have economic crisis and these kind of things? This is something that should be avoided. Well, the point is economy is not so simple, it's a complex game, and not only it's a complex game, but some of the tools, some of the instruments we are using are quite difficult to master. So, particularly thinking about, talking about finance, the first thing is, okay, we are in some parts of the finance, specifically in investment funds. You know that most of the investment funds today, or some of the biggest, the hugest investment funds are run by machines. They are the quantum investment funds. So they are just inside a kind of arms race between them, just to try to find the best algorithms before the competitors got the idea, and so on. Okay, not only about that, also the amount of data that we are using in the investment industry is growing a lot. I mean, nowadays you may use some of what is called alternative data, which is about Twitter conversation, threads, wherever, just to have a glimpse of what is going to happen before the quotation of the companies in the stock markets change. So we have more data, we are inside an arms race, okay, and this is something that is complicated. Second, you know that in finance we are using quite complex instruments. 20 years ago, on the 74, we have the options. It was just the summon of the derivatives and the financial instruments. Nowadays, this is something completely, it's madness. I mean, we have a lot of difficult instruments to master that when they run into some kind of problems, we can go inside an economic crisis, and this is something that has happened before. And finally, the evaluation of these instruments are quite different. Okay, with these things, the problem is, okay, we cannot detect, or we cannot predict, to say something, an economic crisis, because this is something that you cannot do. This is what is called an MP problem, just to simulate the comprehensive economy or even the finance. So this is something that we can approach, but we cannot do up until now, because we didn't have the instruments to simulate that. So what we can do with a quantum computer in a real bank, in a real huge bank? First of all, what we can do is to use the quantum computers to run some optimization code. This sounds like, okay, optimization is a quite difficult game. You may use the optimization not only for the portfolio optimization or creating new portfolios, just increasing the return, reducing the risk, or whatever. You can use also the optimization for a lot of instruments. Among others, you may use optimization just to train machine learning, deep machine learning networks. We'll see more about that later. Okay, they are calling me, but I will try to accelerate. The second one is classification problems. Classification problems is quite a quite simple word. What we are talking about, this is artificial intelligence. This is, for example, fraud detection or customer behavior. So the problem is you have more and more and more data. The computer and the machine learning networks took ages to be trained, and you can use a quantum computer to do it faster and better. Pricing is the third thing. Pricing is, you may use the quantum computers just to simulate the pricing. Most of the most complex instruments, financial instruments, need some kind of Monte Carlo approximation just to compute which is the real price. Okay, this is difficult to do in the real world because Monte Carlo and the financial instruments are growing more and more and more complex, and but you can do that in a quantum computer quite easily. And finally, you may try to do that. I mean, this is about papers. This is about scientific papers we have published. How to simulate part of the economy and see what happens if you alter, if you modify some of the economy rules, monetary rules, or fiscal rules. So this is something you cannot do today. Okay, in this case, the BBVA is going to use the two best approaches. One thing is just to use real quantum computers to apply to this kind of problems, and the other one is to use quantum-inspired algorithms that are coming directly from advanced physics, just to exactly to try to solve these problems today. So in this case, this is one of the most advanced approaches I have never seen in the financial industry. Okay, so finally, and thank you, because Scholastiko has allowed us to just introduce 1 minute about ourselves. We are the teeny, or not so teeny startup, the boutique startup, which is Multiverse Computing. This is a paper from IBM. This is global IBM, just citing us, just the reference in quantum computing. Now, everything that you have seen there about the uses of quantum computer in finance, this is based in scientific papers that we have already published, and we are already just developing that. We have passed through some of the largest accelerators in quantum technologies in the world, which is the Creative Destruction Labs, and we are really, really, really proud to be with such a behemoth like BBVA. Thank you. That's all.
Thank you very much, Enrique, Roman, Scholastiko. It was a pleasure to have you here on stage. It was very interesting. Thank you very much. So welcome everyone. My name is Pedro. I'm today, this morning, the MC of this stage at Innovation Stage by BBVA. Everyone, please have a seat. Feel free to find your best space. And we will start right now with the next panel and speaker. I'm going to give you a couple of seconds to take your seat, to be comfortable before going on. This morning we had an amazing moment, so to speak. It was the final of Open Talent competition. We were announcing at 12 o'clock, a couple of minutes before, who was the winner of Open Talent competition this morning. And then this panel that you saw before was about computing, extreme computing. It's very exciting when technology and finance are mixing together to do something amazing. And next speaker with us, please everyone have a seat and find a little bit more there. You have more seats available for you. We're going to discuss and to talk about something different, something new that is called the behavioral economics. Something that maybe you are not aware about what is happening there in that topic, but for sure you are going to learn things very interesting. And for that, and with us, we have Enrique Belenguer, who is Behavioral Economics Global Leader at BBVA. So Enrique, welcome. Thank you very much.
Thank you very much.
Applause.
Hello, how are you doing? Good morning. Everyone feeling right? Yep. Okay, so we're going to talk today about behavioral economics. So first of all, who knows about behavioral economics? One here, like not your head, like yes, no, no, yes. Okay, kind of. So I'm going to give a pretty basic explanation, but I'm happy to talk about all of that afterwards. So what is behavioral economics? As having that surname of economics basically comes from the academia as something challenging traditional economics. Traditional economics says that humans are rational. And well, there's some research saying that we are not as rational as we think we are. And you would say, Kike, we know that. We know that we are not rational. Yes, but we keep on working on campaigns, on products that are aiming more of a client that looks more like Mr. Spock. How many times have we seen those campaigns that try to push us to eat healthier, for example? And they say, well, bear in mind how many calories fries have. Do you really think people eat fries because they don't know how many calories they have? Do you think anyone really believes that fries are healthy? No. It's not about the information. It's not about the incentives. It's about the context. In the context where we decide. So, behavioral economics is a lot about science, so we're going to do something fun. Let's cut you in half. Like A, and B? Yeah? Okay, A, raise your hand. Good. Now, B, raise your hand. Yeah, well, we got the smart people in the audience. Great. So, B side, close your eyes. Close your eyes, the eyes open. Good. Okay, now, A. Look at the screen, read what's on the screen, and make your mind. You're in B, you should be with your eyes closed. No cheating. So, eyes on the screen, read that, and decide. 1 or 2. Yeah. Okay, now A, eyes closed. Now everybody, eyes closed. I cannot see anyone's eyes. Okay? Close, close, close. A, close your eyes. Okay, now B, you can open your eyes. Look at the screen. Make your mind. Here should be meters as well. Sorry for that. It's meters, meters. We're always talking about meters. So read that and decide. No cheating. I'm seeing some eyes open. Eyes closed. Okay, now everybody open your eyes. I'm gonna give you like 10 seconds to make your mind a guess. How tall is the tallest coast redwood in California? In meters, no decimals, it's okay. So think about it. If you have like a piece of paper, write it down. I don't want you cheating. And if you don't have a piece of paper, just think about the number. Like, I don't know, like, put it in your mind and think again about it. Yeah, everybody? You have a guess? Good guess? Yeah? Okay, more or less. Okay, raise your hand if you think the tallest redwood in California is more than 300 meters. Okay. More than 250? The ones of 300 as well. 300 is more than 250. So, okay. More than 200. Again. More than 150? More than 100? Yeah, okay, more. Yeah, good. What happened here? What we see is that the average guess in this side is way higher than in this side. And I did something really simple. I just show you 2 slides. The first one is, do you think it's more or less than 50 meters? And the other one, do you think it's more or less than 300 meters? You could say, well, this is fun, I can do it with my friends, but is it of any use? It is, because that means that our brain uses some random information to make decisions, to make judgments. So when I ask you, how much do you want to save per month for your pension fund, for your pension plan? Do you really think you have a number in mind? No, I can condition it. Depending on the anchor that I use an anchor, it's gonna nudge you towards more or less. Actually, this can be replicated with pricing. People is asked to write down the 2 last digits of their social security number. Then they are asked about how much they are willing to pay for different products. Guess what? People with higher social security numbers give higher prices, will be more willing to pay, or they will be willing to pay more money for the same products. So this is not rational, and we should bring that into the conversation that we have within companies. So I'm gonna do a really quick summary on what is behavioral economics, because I want to explain some of the things that we do in the bank. If you're really interested in it, Google it, but I'm gonna give you the basic. So there's like 2 sides. The first part is biases and mental shortcuts. So this is Daniel Kahneman, Nobel Prize 2002 in economy. He's a psychologist, so economists should be ashamed. I'm an economist. And he's basically saying, well, you economists think that people are rational, they're like machines. They know what they want, and they are actually making the right option. So they are deciding to take action, to behave in a way that's in their best interest. What we see is not like that. So there are 2 elements. The first one, biases. People is biased. And what is a bias? Well, I like to differentiate bias from an error, because imagine I have a target at the end of the room and I'm like throwing darts. And sometimes it goes high, sometimes it's too low, the right, to the left, but never hitting the bullseye. What's that? Anyone? I'm really bad at throwing darts. That's why. So I'm miscalibrated. Okay, let's think about a second scenario. I have the same target, I'm like throwing darts, I never hit the bullseye, but always going down right. Is that an error? No, that's a bias. And that has a huge implication, is that you, from the outside, you can predict it. It's what we see with savings, for example. Do we see people saving a lot? Most of people saving more or less, and people saving too little? No, most of the people is saving less than they should. And not only that, is that they know, because we make some research, we do surveys, and we realize that 60% of people in countries like the US regret not having saved more when they were younger. So it's when you go out at night, you drink more than you should. The next day, you don't feel that well, and you say, I will never drink again. What's going to happen next weekend? The same. So we don't really learn from those kind of things. So we should bear in mind those elements. We are biased. And then as well, we use heuristics. We don't bear in mind all the information that is available. In the economic framework, say, get information and decide. Well, guess what? We don't get all the information. If you work in marketing and you work with packaging, you would realize that changing packaging can change the perception of certain products. Before being in the bank, I was in consulting, and we did some experiments with chocolates and food products, and changing the packaging made people think that the chocolate tastes stronger when the packaging was black, for example. And then you said, because you said, okay, try this, it's the same chocolate, blah, blah, and then you said, okay, I cannot lie to these people, I'm going to tell them. It's the same chocolate in the 3 different packagings. And then they were saying, I don't believe you now. This cannot be the same chocolate. It is. It's how our brains work. So we have this idea that we are biased and we are limited in terms of cognitive capacities. But on the other side, we have Richard Thaler, Nobel Prize in Economics, 2017, saying, yes, all that's true, but we can do things in that respect. We can do two things, really. Nudging, basically using a bias. So Thaler worked a lot with pensions. So what did he say? Well, one of the biases that we find more often is that we are present biased. What does that mean? That we like to postpone sacrifice and bring benefits to the present. It's like, if I have to do something that's something that I don't like, I would do that tomorrow. Like saving, going to the gym, eating, I don't know, lettuce or salad for lunch. So we tend to do that. So Thaler said, that's one of the problems that we have with pensions. Let's do something. Let's get people to sign today for the pension plan, but they won't start contributing today. They will start with the next salary raise. So you are doing 2 things. You are moving the sacrifice and the pain of paying to the future, and actually you're making something that could be a loss. So if I'm earning today 1,000 and I'm saving 100, I have a loss of 100. But if I was earning 1,000 and I have a salary increase on 1,100, and I'm saving 100, I don't have a loss. I don't feel that loss. And something that in behavioral economics we are really keen on working on, how loss averse we are. There's another technique called debiasing. It's less effective, but we have to think about it from time to time. If the nudging means we acknowledge the bias and we behave or we work in the context that way, debiasing means let's try to get rid of that bias. How can we do that? For example, with something called the primordium analysis. We tend to be overconfident as humans, too optimistic. And we like to think, how do you see yourself? How do you see your company in 3 years? And we fantasize a lot. I'm going to be the leader in my category. I'm going to be the best company in digital services, things like that. And that's good. Okay, great. But the second question is, imagine in 3 years, you've not achieved your goals. Why? And suddenly, barriers that you have ignored before start arising. It's called primordial analysis because some doctors do that before getting into really difficult surgery. It's like, okay, let's imagine that we do the surgery and the patient dies. What has happened? Okay, there was like some problems with heart functioning that we had not in mind. We didn't test for some specific reactions to anesthesia, whatever. Okay, so there are some techniques to debias. So with all this, we have what we call choice architecture or architecture of choice, meaning that if we are able to change contexts, we are able as well to influence decisions. And this is really important because you may think, well, we should let people decide. Not working on the context doesn't make this context better. Having a neutral context means just lead people to make really bad decisions. So what do we do at BBVA? In terms of biases and heuristics, you're going to find a lot. There are more than 250 or something like that because of the academia is producing and producing and producing. So we decided to work in a framework to make this a little more understandable. So we said there are 3 elements that kind of makes us think that people are not as rational as we think. They have a bounded rationality. So it's preference, beliefs, and shortcuts. First of all, preferences, they are not stable nor clear. We tend to think that people know what they want, but sometimes they don't. And they are making preferences on the go. When you go to the supermarket, do you really know what kind of pasta you're going to have? Sometimes you do. Sometimes you don't. You make the decisions there. So the context has a great impact. I'm putting this photo here because how many times, I guess you don't, but some people go on a diet and sometimes you happen to be in a bakery store. And you're in a diet and you see that croissant and it smells really good. So what do you want? To eat the croissant or not to eat the croissant? Eat the croissant. No, you actually prefer the both things. You have 2 goals. Superordinary goal, subordinary goal. In the long term, you don't want to eat it because you know it's bad for your plan. But right now, you want to eat it. So preferences are not clear. But even more, we know if you cannot see the croissant, you cannot smell the croissant, even you know it's there, you're less prone to eat it. That's not rational. How do we understand those preferences and make sense of the context of decision? Secondly, imagine you're superhumans and your preferences are super clear. Even that, we will find ourselves making mistakes because we are wrong about how we make judgments. We think we are really good at deciding what's best for ourselves, and we don't. We tend to be overconfident. We tend to be too optimistic. And that's good, I guess. Charlotte, that's a professor, American professor, says that although we all know that in the Western world, the divorce rates, it's almost 50%, when you ask a couple that just got married the probability of getting divorced, what do they say? None, 0. That's wrong. I wouldn't marry someone who thinks that their divorce probability is like tossing a coin. But that's wrong. Your probability is 50% or 40%. And that, it's funny if you talk about marriage, or not, I guess. But what about insurance? What about the chances that you have to, have cancer, get robbed, have an issue with, whatever, your family? So we are wrong about how we make judgments of the reality of the probability. So we need to help our clients to overcome overconfidence bias, optimism bias, and so on. And finally, imagine you are super humans. So you know your preferences, you know your beliefs. Even in those situations, your brain is not like a computer. You cannot process all the information. You're going to use shortcuts to make the decisions. The elements, the decisions per se, they have signals. So let me give you an example. This experiment in a supermarket, they put like either 6 jams or 24 jams. When they put 6 jams, there's less people getting close. It seems like less interesting. not much less, but a little less, like from 60 to 40% of the people passing by. But what happened with sales? When we have 24 different jams, there's 10 times less probability of selling the jams. So if you use 6 jams framework instead of 24, you will sell 10 times more. And that makes a lot of sense because you go there, you say, okay, I want the strawberry jam. Well, no, have always strawberry jam. Let's try something different, like raspberry. Well, if I want to go crazy, raspberry is not the craziest thing in the world. What about mango? Mango, and what about this one? Mango and pear. So you start going around, at one point, you reach your point of cognitive fatigue. You cannot process more trade-offs. So you say, I will come tomorrow. So you are postponing that decision, and that's bad for the sale because probably that sale will never happen. Okay? So these 3 elements help us understand and review communications, products, website design. Actually, what we are working, it's in this framework in which we use the client cognitive biases and our own biases because we are human as well in the company. So we have projects like financial health here. So how can we help our clients to make better financial decisions? Because they are limited cognitively. They're going to make wrong decisions. We need to help them. As well, we have some problem with security. We're working with phishing because phishing is not a technological problem. It is somehow a technological problem, but basically it's a psychological problem. People is being deceived. So how can we help people to make sense of those emails that they're getting that they are false? And actually, the bad guys, they know a lot about behavioral economics because they use really powerful mechanisms in those emails. Then we start working with the customer relationship and experience, digital journeys, how we make things easier, like with the jam experiments. If we start throwing products in the websites, like you have like 50 different credit cards to compare, people are gonna go nuts. They don't know. Or you ask people, okay, you wanna get this insurance? How much you want to pay per month? Or how much, what's the quantity you want to insure? Regular people, they're gonna be like, what? I don't know. And we find that many, many times. So after that, we start touching more on the biases of our own people. So segmentation, communication, selling techniques, employee relationships. We are working with the HR teams on diversity and inclusion because there are some unconscious biases on promotions, on how we deal with recruitment. And we are having like great results promoting and recruiting more female candidates, just changing context elements. And finally, the people making the strategy, the management of the whole company, they are biased as well, and they're making really important decisions. So we are working with them in what we call behavioral economics in the boardroom. So are they overconfident? Can we do pre-mortem with them? Can we work in red teaming, meaning at least today, one of you is going to be criticizing everything that comes around, so we don't just accept what it comes. And finally, for example, avoiding group thinking. What happens when there's a team of people deciding? The first one talking is the boss, so he says something or she says something. The second one, the person closest to the boss. So when you're the fourth one, even if you don't agree with your boss, you're going to say, yeah, whatever, I will just follow. No? So all those elements are really important on how can we improve decision making within the company, looking at our employees and looking at our customers. And time's up, and that was me. Thank you very much for your time.
Thank you, Enrique. Thank you very much. It was a pleasure to have you here on stage telling us so much interesting things. We are going to change. I'm going to give a couple of seconds so you can leave. People that are waiting outside, you can enter. Right now, we are going to talk about the BBVA challenges. This is an opportunity to all of you. If you are a startup, you have brilliant ideas, you can participate in BBVA Challenge. So you are interested in knowing what kind of challenge we launch here in South Summit 2019. This is the time and this is your moment. So take a seat, please, and enter the stage.
Tenemos menos tirón, lo que veo.
We are going to start in 10 seconds, 20 seconds, so everyone please on the corridor, you can take a seat and take your chance to listen what we are going to launch in this South Summit 2019, please. And for everyone, and for the new, welcome everyone to Innovative Stage by BBVA at South Summit 2019. My name is Pedro Muñoz. I'm the MC this morning on this stage. And I'm going to introduce the next speaker who is going to tell you the first challenge of BBVA related to data. With us, we have David Martin, and he is a manager at BBVA Open Innovation. So, David, thank you very much. An applause, please.
Thank you, Pedro. Please take a seat. It looks like the name of our challenge has scared people because many people have left the room. Okay, so we are going to speak about the first challenge. And I have two experts from BBVA in order to elaborate it a little bit. On my left side is Javier Escribano, he's a manager at the Open Market team. And Daniel Jones, who is from Idaho, the States, by the way, exotic. He's leading one of the most relevant teams as well in BBVA, which is Advanced Analytics in Client Solutions. So the name of the challenge is New Sources of Data for Onboarding, Optimization, and Risk Assessment. And first question is for Javier, and it's for the sake of providing or giving some background. And what is Open Market at BBVA, Javier?
Open Market, from our point of view, is a program that we are developing that has like two main areas where we are working right now. The first one is increasing the amount of customers that we are attracting through digital processes. Those digital processes need to meet some criteria, like for example, they should be end-to-end, 100% real-time. They also need to try to improve or reduce the amount of documents that the customer is providing, and also the physical signatures. We are also working in the kind of Know Your Customer part module. We are developing a specific module for that with a joint venture that we have recently created. And the idea is that it's really cutting edge comparing what is in the market right now. But it's not only about volume or increasing the amount of customers that we have right now. We are also working in the other areas like creating more value with those customers, like increasing or the engagement they have with our bank. So we are really focusing those two areas, increasing the customer base and also increasing the engagement of those customers.
And just for clarify, there is a big difference between the analog or physical onboarding and digital onboarding in terms of customer experience and also the efforts for the bank. Can you explain a bit about this?
In our branches, we have analogical processes. So you have the social touch. You have people who make the onboarding and really can ask you for different documents or whatever. People really don't have that kind of pain for providing that information. But in the digital processes, we need to really simplify that. That means that we need to reduce the amount of data that we are asking our customers, and that usually means that we also need to simplify our scoring models, for example. And we also need to ensure that you are the person who are really doing the process. And that means that we need to ensure the identification and verification of the documentation and all the things that are related with that. And also we need to try to reduce the fraud with accessing to other providers, other data sources, whatever. And that's why the challenge is really important for us, because we need those data sources to be connected to provide that information to our digital processes.
Okay, so as you can see, fraud prevention and risk assessment is key. It's a key issue in this scenario. So let's go with Daniel. How do you work at customer analytics or advanced analytics with departments, business units like Open Market or related departments like fraud or risks? How do you do that?
So the role of advanced analytics in BBVA is to foster innovation through data. So we are leading the transition from a traditional financial institution towards a data-driven company. And being a data-driven company means that we create products and services, let's say solutions, that are based on data. So this approach with the business units involves helping them understand what can and what can't be done using data, helping them envision how data can enhance their offerings. And we always try to stretch their innovative vision one step, two steps further by introducing or suggesting new data features. Sometimes those data features can be internally developed, and if not, we help them find the most suitable partners that are available in the market and adequately integrating those partners into the BBVA ecosystem. Over the past years, we've built an extraordinary analytical capacity internally with data scientists, data engineers, the actual data platform. And all of this is enabling us to deliver a lot of the data-driven solutions that the business units demand in order for them to create their digital offerings and launch them onto the market. With the control units, our role is to challenge status quo, create disruption in a controlled way. So we never take no for an answer, and we always focus on how things can be sorted out in BBVA. And I must say that the control units such as legal, risk, compliance, finance, and so on are slowly, progressively moving and adopting this type of mindset because there's a clear mandate from top management in BBVA to make things happen, to make innovation and transformation a reality.
So you're a kind of a game changer.
Totally.
BBVA.
We try to at least.
Okay. So Javier, let's drill down a little bit on the data. What kind of specific data are you looking for in this challenge?
So any kind of data is welcome. We need to get, for example, personal data, really important for us. Data related with your personal revenues, personal costs, really important also. Information related with your address, the properties you have, all things related with fraud, like for example, where are the different blacklists where that person could be, if a specific email address is being used for fraud in other companies or in other e-commerce or entities. So I would say that any kind of data is welcome, but we need to be able to connect to that information in real time and in a really easy way. That's what I would say that is important to us.
Okay. And Daniel, how can we manage third-party data at BBVA?
So there are two ways, at least two ways, to integrate external data sources into the BBVA ecosystem. So the first one is accessing third-party data in the form of a set of client variables. Let's think of several variables or many of them. Each of those variables must have a specific meaning and interpretability for us. And that allows us to introduce them into our analytic processes and optionally enrich them with internal data we may already have or pieces of data that open market prospects are providing online upon application. So this is the ideal scenario. Unfortunately, it's not always available because third parties, they may be reluctant. They often feel like they are sharing or giving away their secret sauce ingredients, and they might prefer not to do that. So the other option is to buy a score from a third party, a score that has already been condensed, therefore potentially has less meaning for us. Let's think of it as a risk score that ranks clients from 1 to 10. So in this case, BBVA has to rely on the analytics process that the third party has already executed. It can be like a black box because we only get access to the final output, to a single synthetic item of data per client.
Okay.
So we prefer obviously the first scenario for obvious reasons, but we're open to engage in either model.
We have time for another question, and it's also about you, for you, sorry. Since the main geographies that we are aiming with this challenge are countries in Latin America, and there is no GDPR there, does this makes things easier for us? Or
yes and no. So regarding GDPR, the bottom line is that the data belongs to the consumers. And we, as a financial institution, we are granted permission from most of our clients to access and use their data in order to improve product offerings, enhance customer experience, provide personalized advice, and so on. But this general principle of data ownership by the consumer is something that we apply in all geographies that we do business in, because we believe it's common sense, it protects the consumer, and it gives us the responsibility to handle data to the clients' and prospects' best interest. And it also allows us to continue building trust with our clients, which is such a core and fundamental element of our business model. So European Union GDPR is the strictest framework among all jurisdictions that we serve in. Not having GDPR in Latin America or in the US makes life a little bit easier, but just a bit, because a lot of markets are moving towards GDPR-like regulation. Some states in the US, with California taking the lead. Also, some states in Mexico are in that transition. So usually, we prefer to apply most of the GDPR principles worldwide in order to be prepared for the very likely changes yet to come in a lot of markets, expected to converge towards GDPR at some point.
Okay. So if you are a startup or a company that might be interested in participating in this challenge, please join us. If you need more information, you can drop by our BBVA stand in the middle of the corridor. And thank you for your attention.
Thank you very much. And now we are going to talk about the second challenge that we are launching this South Summit 2019 at BBVA. And with us, we have Jorge López Mazuelas, who is the head of open markets and the enterprise clients at BBVA Spain. So, Jorge, a big applause for him, please. And welcome to the stage. I think that we can use the chairs.
Okay.
Yeah, why not? Sit down wherever you want.
Are we going to be 10 minutes, just 10 minutes, or we have a half an hour?
We have 30 minutes. No, I'm joking. No, 30 minutes now. It's enough, 10 minutes, I think. So welcome on the stage, and the idea is just to talk about the new challenge that we are going to launch about the SMEs. So please tell us a little bit more the challenge and why the challenge.
Well, we think that SMEs, everyone knows that SMEs are the economic engine of growth of, and well, unlike as corporate normally has enough resources to develop their own tailor-made solutions, that's not the common case for SMEs, and that's why we are here, because we want to help our clients to transform their business.
Yeah, absolutely right. I think I totally agree. You don't mind if we share opinions, all right? Because it's true. The challenge, I really like it because I think that SMEs is one of the base of the economy. They are giving a lot of employees, a lot of opportunities in the economy, and somehow we have to help this segment. And clearly, I think that we have an opportunity here to identify the opportunities to help the segment.
Yeah, fully agree.
So, and you have a question to me, or we continue?
Yeah. When I came to you and say, hey Pedro, I want to do something for SMEs, you tell me just in the right first moment, we have to do a challenge for SMEs. So why did you think that? I mean, I know why SMEs, but why this kind of format?
Oh, the challenge, all right. The challenge is true that I think that it gives a lot of opportunities to everyone. Because we are not looking just a startup or a scale up or a solution or a technological solution or proposal that is in the market. Also, we try to gather all the kind of startups. And this is true, that's why we launched the channel. And the channel also doesn't have just a specific call, like we do, for example, when we launched our needs, BBVA is scouting needs constantly in order to collaborate with the startups, to collaborate with the ecosystem, making some calls to certain hubs, but it's true that in the end, a specific call, is reducing the chances that you have in order to receive wider solutions. And when you launch a challenge, in the end, it's much wider. The concept is bigger. So that's why I think that here we have in South Summit this opportunity also to have and gather much more solutions than just a specific call. Because basically, we were talking like, I don't know I don't know what I want. This is the point. I mean, here, this is a wider channel. This is an open challenge about SMEs, and I don't know what I want. Just tell me what you have for me, and tell me that this is what I want.
Yeah, I fully agree. I mean, our clients are changing. They became more demanding. They are looking for digital solutions to transform their business, and they need it now. So BBVA strategy started by looking at what our client needs, and we keep doing that. We tailoring our solutions, and we are transforming our business models in order to help our clients. And I think we have to keep doing what we are very good at. Um, well, the market is growing up very, very, very fast with many digital solutions. But if everyone knows that BBVA is leading the digital transformation in our sector, but if we want to provide a full client-centric proposal, we have to do it. We need some help, and we have to look at these new players. And the way to do it is through collaboration or partnerships with these new players. That's the main reason.
Absolutely. You mentioned something very interesting. Why third parties? Why we have to collaborate with others, right? And basically, I'm open innovation head of in Spain, and I really want to collaborate with the ecosystem and the solutions that are outside. But in your case, also, it's a very good point. We need also third parties in order to drive different proposals to our clients.
That's right. Yeah. Well, third parties, it's managed by passionate people. We know that passionate people, they can think that they can change the world, and somehow, some way, in a small or big different ways, they actually do. And well, in my opinion, walking outside of the Chinese walls will let us find more opportunities than threats. And that's the way we have to walk through. Find opportunities to help our clients. That's what we are looking for.
And sometimes the opportunities are outside, definitely, because
Definitely.
I say BBVA is through that.
You're open innovation, I'm open market.
Exactly. Both of us, we are open. If you want, you can describe what is open market, just to everyone to understand what is this concept in enterprise clients.
Well, I'm head of open market for enterprise solutions, and we have basically three different areas. The first one is client acquisition, digital client acquisition. The second one is how we can use third-party digital solutions to let our portfolio offering to our clients where they are, that is in other digital platforms also. And the third one is what I call labs, and that's why we are here. And this is because I firmly believe that we need some help to fulfill our portfolio offer for our clients. So this is third parties becomes from.
Absolutely. Coming back a little bit before, what we were mentioning before is true that solutions outside with third parties are outside. This is a real thing. And we see it here in South Summit. There are a lot of B2B solutions that are providing different solutions to our SMEs clients, so to speak. And these different approaches, these are something that we really want to explore thanks to this challenge. I mean, we really need that startups that they have a B2B model just to come to the challenge, to present the solutions, and to say, hey guys, I have a solution for SMEs, traditional, big, small ones, you name it. But in the end, my solution is in order to help them to approach different products, to digitalize these services. I'm not going to name any single vertical. In marketing, I've seen in logistics, in transportation, in management, human resources, finance, everything that a startup, an SME needs. Some startups are providing them that solution. And that's why I think that this is a great opportunity also to gather that solutions, to know them, and to understand if BBVA can be, I don't know, let's see, a channel to sell the products, or how to approach to the startups. I mean, I'm not saying that we have the solution so far. That's why we launched the challenge, in order to rethink what to do with everything.
That's right.
But this is something that we have on the table right now. We have to do, with all those solutions in the market, we have to do something, and I feel like we need to approach that solutions to the traditional SMEs.
Yeah, this is the way to do it, Pedro. But, well, we already stand shoulder by shoulder in other shows, but why you don't explain here how the people can join this challenge, or if they are interested of how they can apply for.
Yes, if someone is interested in applying, we have firstly in the website South Summit 365. This is the platform of South Summit for the challenges. There you will find the two challenges that we saw. Firstly with David and Tim and this is the second challenge that we are launching. So the website South Summit 365. And then also in our booth in the middle, in BBVA, you have a QR code, and then you can scan that QR, and directly you will be in the application form of that platform. So it's very easy to apply.
Right.
Then you have there everything that you need to upload all the information, and then basically I don't see any barrier to present the solution to BBVA. because then we will evaluate. I'm going to say a little bit the dates. Yeah, I can
Yeah,
say
that's right.
how is the process? October, it's the challenge. We launch it here in South Summit. November, evaluation. So we will evaluate the best solutions. And then in December, we will announce the winner. And it will be published everywhere. And then also, with all the evaluation process, it's going to give us a very big picture about the solutions that are in the ecosystem and how to approach that solutions to our SME clients. We have a lot of clients.
Yeah, we are.
And this is key.
That's right.
So, just to finish, some remarks about what we are going to evaluate. If you want to comment.
Yeah, I think should be disrupting the solutions.
Disruptive.
Disruptive should be should help our SME clients.
Yeah.
That's the target, and should be passionate, because I think there is the most skill that we are looking for, because with passion we can change everything.
Absolutely, and mostly when this is open. And when it's open, like open market and open innovation, we need open ideas, open startups, open solutions, open mind, and we can, in the end, to rethink how we are going to approach to our SMEs clients with the use of the technology, and thanks to the third parties. I would say that this is the final tag. Right? So I encourage everyone, please, to participate to the challenge, and I'll see you, I hope, as a winner. So thank you very much, Jorge.
Thank you, Pedro.
And last speaker that we have today is going to talk about the sustainable finance. And with us, we have Emilio Martin More, and he's the Sustainable Director at BBVA. So please, welcome, Emilio. Thank you very much for being here. Thank you,
Pedro. Thank you. Hello. Well, good afternoon, everyone, and thanks to my colleagues from BBVA Open Innovation for inviting me to this amazing event. We're going to talk now about the benefits of sustainability, if any. In life, in general, we do things for one of three reasons: by conviction, by obligation, or by interest. Let us see how, in the case of sustainability, the three can coincide. Sustainability, we hear this word every day, lots of times, in the mass media, in the social media. All the big brands are including this mention in their communications. The smaller brands are following as well. But is this only a trend? Is this a passing fad? Or is sustainability here to stay? Well, some speak of the age of responsibility. The truth is that we're living today very interesting, very challenging times around sustainability, around sustainable finance. There are 5 big forces that are shaping sustainable finance today in the world. First of all, the global agenda. We have the Sustainable Development Goals of the United Nations. We have the Paris Agreement on climate. Both these 2 frameworks are pointing the path to follow in sustainability and in sustainable finance as well. I read today that around 71% of CEOs of companies around the world believe that business should play a critical role achieving these goals, but only 21% believe that in the current situation they are achieving this. So there's a long way to go. These goals carry not only managing risks, but entail as well a huge market opportunity. We'll see this later on. Then investors, a very important stakeholder group. More and more institutional investors, huge investment funds, are joining the United Nations Principles for Responsible Investment. We get messages all the time from the biggest funds in the world. Remember Larry Fink, the CEO of BlackRock, reminding investee companies that sustainability matters and that companies should integrate this into their business if they want to be eligible for BlackRock's investments, for example. Then regulators and supervisors. We are also getting signals from regulators and supervisors. We'll see some of these initiatives later on. And then last but not least, technology. We usually think about sustainable solutions as expensive solutions, more expensive than the regular or the standard ones. This isn't necessarily true. We have big data, we have artificial intelligence, we have augmented reality, Internet of Things, we have blockchain. All these technologies can help sustainability get mainstream and not be the expensive and hard solution to go. An example about the huge market opportunities around mobility, healthcare, energy efficiency, clean energies, affordable housing. Around $12 trillion are estimated that will be needed for all these activities by 2030. Here we can see the gap between the current investment in all these activities and the demand that is expected for 2030, the deadline for these Sustainable Development Goals. Of course, governments will play an important role here, multilateral development banks as well, but the private sector has a word to say. Private sector, companies, business, banks. Well, we see all the time, this is a picture of this Friday school strike. Millennials, new generations are changing their consumption patterns. They are changing business culture. Most of them, almost 70% of millennials interviewed, said that for them, values in a company are much more important than the salary they would get there working there. Some figures here. These are the percentage. This is the percentage of studies out of more than 200 studies that show a positive correlation between sustainable performance and financial performance in a company. Lower cost of capital, improved operational performance, or a positive influence on the performance of shares of the company. So we can think sustainability can be rewarding as well. As a logical consequence of all this, sustainable investments is growing, reaching around $30 trillion in 2018, mostly in Europe and the US, but we can see as well a dramatic increase in other geographies. Regulators, supervisors, is this mandatory? Is sustainability mandatory today? Well, as usual, we start with recommendations, with soft law that end up to become mandatory. So we have an example, the European Union Action Plan for Sustainable Finance Growth. They have 3 goals and 10 actions, among which the taxonomy, we have to speak a common language. To be comparable, sustainable finance should be the same for BBVA, for other peers, so this can be comparable. Sustainability in disclosure and accounting, very, very important. The market, investors need to have more and better information on climate-related, environmental and social matters of companies. Creating standards and labels is another of the 10 actions that this plan has. Creating labels means we can't offer green products to clients if they really aren't green. So it's very important to have green labels, to be clear about that, and to avoid greenwashing somehow. ESG in ratings, well, all of us know Standard & Poor's and Moody's and Fitch and all these financial credit agencies. ESG, environmental, social, governance matters, have to be embedded into their criteria. A threshold of minimum factors or variables around environmental and social matters should be included in these ratings, so ratings can provide a holistic picture of the company, not financial from one side and environmental, social, and governance for the other. Institutional investor duties, this is about fiduciary duty. Asset managers must take into account sustainability when investing their clients' money. TCFD, another initiative, this stands for the Task Force on Climate-Related Financial Disclosure. This was born after all the financial crisis. The Financial Stability Board decided to create this task force. in order to avoid a new financial crisis happen in the future. So this is about, as I said, providing more and better information on how businesses, how companies manage climate change matters, how they integrate climate risks into their risk management model. Recommendation areas are around governance, strategy, risk management, metrics and goals. Some banks are working, like BBVA, in a pilot with other banks and United Nations, and testing different methodologies in order to know what are the physical risks and transition risks we are facing regarding our lending portfolio. Let us think, for example, our real estate business. We have lots of mortgages in areas where a rise of sea level would mean devaluation of all those assets, all those homes or buildings. That's a risk. We have to calculate and make figures. And how are these physical risks that are already here? We've seen the Gota Fria a few weeks ago here in Spain, the worst in the last centuries. So how is this going to impact our probability of default of our loans? Transition risk. What would happen, for example, if tomorrow the European Union or whoever says that diesel is forbidden? We have lots of loans to automotive companies, so this will have, of course, an impact in our loans to this sector. So a lot of work around this very complex issue, and of course we are working on this involving our colleagues from the risk area. Very, very important. Another initiative here, the regulators, the NGFS, which is the Network for Greening the Financial System. Central banks of many countries and supervisors of other countries are working together to promote green finance, and they have said very clearly that climate risk is a source of financial risk. If this correlation wasn't clear, they have been clear about that. So how are we banks reacting to this if we have seen that it's interesting to be sustainable and that is becoming more and more mandatory? Well, banks have been developing their own self-regulation standards. We have the green bond principles, we have the social bond principles, both of them led by the International Capital Markets Association. Later, we have had the green loan principles, the sustainability-linked loan principles. This is getting more and more complex. These are loans where, for example, the pricing evolves and changes according to the environmental performance certified by a third party or a score in sustainability of the company. So, very interesting, everything what's moving around green business and green finance. All companies, all banks, BBVA and its peers are working on green mortgages, are working on loans for electric cars, loans to improve the energy efficiency of neighborhoods, of homes. So lots of initiatives of all the banks. Beyond green bonds that are the most common, or the one that's already always named, no? There are many other solutions, financial solutions for either wholesale clients or retail clients. It is true that we have especially moved on in the wholesale markets, green loans, green bonds, social bonds, sustainability bonds. Here you can see the evolution in the last few years. There's a lot of room for improvement in this year and the next years. The most important increase has been in the red part. The red part are the sustainability-linked loans I mentioned. These loans can be either green, either social, or both. We have some examples. Imagine, for example, a loan. One was recently granted by BBVA to Iberdrola. We can call it a just transition loan. It has a green factor and a social factor. The price evolves and is reviewed every year according to two variables. One green, which is the installed capacity in renewables by Iberdrola, and the other one, which is social, the energy inclusion. So we can combine both social and green, and we can innovate regarding green and social finance, sustainable finance. How can we do all this? Banks have developed also some initiatives in coalition. Recently, 2 weeks ago, the Principles for Responsible Banking were launched in New York in the Annual Assembly of United Nations and coinciding with the Climate Summit. 30 banks, among which BBVA started like 1.5 years or 2 years ago, working on these principles, elaborating these 6 principles, and now we have 130 banks from all over the world, from the 5 continents, joining this initiative. These are the principles. They seem easy, just a short sentence per principle, but what is hard is to comply and to commit and to show progress on each of the principles. Basically, there are 6 principles, but basically which banks signing these principles commit to assess their main impacts, both positive and negative, then set targets on the main, on the most significant areas where they have impacts, both positive and negative again, and then report, be accountable with the progress made regarding the implementation of these principles and in the compliance of the targets they have set. So this is another example of how a sector initiative among banks from all over the world. What's our experience in BBVA? Well, last year, 2018, BBVA launched its strategy on climate change and sustainable finance, what we call our Pledge 2025. It has 3 pillars or vectors. One, of course, being a bank, is to finance. We commit to mobilizing up to 2025 100 billion euros in sustainable finance. This is not only green finance. An important part of this amount will go to green finance to help our clients in the transition towards a low carbon economy. Around 70% of these 100 billions will go to this. But then we include here financial inclusion, microfinance, finance to entrepreneurs, impact investment. All that is included here in this 100 billion commitment. By June 2018, we had already reached 21.8 billion, so we are on our way to achieve this goal. The second pillar is to manage. We want to reach this 100 billion, but not at any cost. We have to manage our negative impacts, both the direct and the indirect negative impacts in society, in environment. As you can imagine, the direct impact of a bank is not really relevant. We have our premises, our branches, with our greenhouse gases emissions, but this is quite low. The important impact is through our lending portfolio, through the activities we finance. So when we say we are going to manage our impacts in order to minimize the negative ones and to maximize the positive ones, we mean, for example, having a norm which we launched last year in order to have a specific due diligence and enhanced due diligence in those sectors that are especially that especially impact environment. For example, mining, energy, infrastructure, or agribusiness. We have specific norms which are public in our website regarding those sectors. Coal, financing coal, for example, or tar sands, or palm oil. All that is in our norm. Our goal is to progressively align to the Paris Agreement on climate, not to reach the 2 degrees, and if possible, stay at 1.5 degrees. This is too ambitious. This is a huge task. We can't do this on our own. So the third pillar of this strategy of BBVA's sustainable finance and climate change strategy is to engage with all our stakeholders. We mentioned before some initiatives, some sector initiatives. We work a lot with the Spanish Banking Association, with the European Banking Federation, with all our peers in general. But we also engage with NGOs. They help us, for example, shape our norms. They say, hey, this is not enough for us. You should be more strict on coal. Or what are you doing with tobacco? Or have you thought about the impact of tar sands? You should go this way. So we have a full dialogue with many NGOs regarding tax responsibility, for example, on many subjects. civil society organizations, investors, of course. We have our roadshows, we have calls. Every week almost we get questionnaires from investors asking on things related to environmental or social matters. So engagement with all the stakeholders. Some of these initiatives I mentioned before, the TCFD recommendations, all these completed with financial education, especially with retail clients, and the responsible principles I mentioned before. So I mentioned by conviction, by interest, by obligation. This tries to show that BBVA is also convinced about this. It's aligned with our purpose, which is to bring the age of opportunity to everyone. So quite a challenge. We were used to our speech around digitalization in the last few years. People were quite shocked when our CEO in the last AGM was talking like 15 minutes about sustainability. They said, is this the new speech? You're not talking anymore about digitalization? Well, those two speeches are not exclusive. They are compatible, they are complementary, and what we're doing now involves a huge transformation on the same scale as digitalization, but with much more at stake. The planet is at stake, climate, environment. So this is more or less what I had to say. Thank you very much. I don't think that we have time for questions, but I will be around, so happy to talk with you about anything you need. Thank you.
Thank you, Emilio. Thank you very much. And that's exactly if someone wants to have a question to Emilio, can ask it a little bit after that. And that was everything. That was the end of the morning. We will be here in this stage at 3:15. So thank you very much for being here. And I'll see you later. Bye-bye.